All right. Everything is looking good and we are live. Not sure exactly what is going on with YouTube here, but probably just going to go ahead and proceed in the meantime. And hopefully everything is coming through loud and clear. For whatever reason, we're not showing up as live, but on my end, everything looks good. So I think we'll go ahead and just proceed from here. And hopefully everything will get hashed out here in a minute. I'll double check in a couple minutes that YouTube has this posted up, but not showing up currently. So, but yeah, let's go ahead and just run with it. So welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 5/13/2022. And just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So obviously it is Friday the 13th out there. So if you are superstitious, might want to just roll back over and go back to bed. But otherwise, we can jump right into it. So yeah, not sure what's going on. We're not registering, showing up as live, and have no viewers currently. So I'm not sure if there's some kind of weird issue going on. But regardless, on my end, it says we're live. So let's go ahead and jump right in. And hopefully in a couple of minutes, this will all hash itself out. But in the meantime, I can't currently find the actual link or the video live. So regardless, we'll go ahead and just get started here. And then we can kind of go from there. I'll take a break in a couple minutes and check to see if everything is sort of like working or showing up now. But that being said, we can go ahead and take a look at a little bit of everything. Let's go ahead and let's start with crypto today. And we're actually going to jump over to, let's jump over to UST and Luna. So I want to talk about this. Obviously, there was a crypto blow up. I've been talking about how I was expecting a, up to 50 to 99% pullback on a lot of these cryptos. We obviously saw a pretty massive dump on pretty much crypto across the board, as well as quite a few stocks. And then obviously we saw the UST, the Terra, and the Luna complete meltdown explosion. You can call it whatever you want to call it. You can call it a rug pull. You can call it a collapse. You can call it a failure. It doesn't matter what you call it. The fact of the matter is, this is supposed to be a stable coin. So this was supposedly going to be pegged to the dollar. One of these Terras is supposed to be $1. And obviously we saw that peg break. Initially it went down to 86 cents. And since then, over the last like 5 days, we have seen follow through. And now your $1 pegged stablecoin, or supposed to be, is now worth 18.5 cents. So basically, let's just say you had $100 locked up in Terra, your stablecoin, just on an exchange that you thought was at zero risk whatsoever. Well, you just lost 81.5% of that. So you lost 81.5% of your money. You lost $81. So your $100 is now worth $18.50. This is supposed to be a stable coin. Did I think that it was going to be Terra that blew up? Did I think it was going to be USDC that blew up? Did I think it was going to be Tether? Who cares? I mean, they're all trash. They're not audited. They don't follow legal guidelines. Not all of them. I shouldn't say every single one of them, but we've known there's been an issue with Tether for years. So there's no surprise whatsoever that one of these other trash stablecoins goes to zero. And then obviously this had to do with that whole Do Kwon situation. The dude's supposed to be buying $1.5 billion worth of Bitcoin, in $200,000 or $1 million installments. Wait, yeah. All had to get liquidated to try to save this project. Is this a rug pull? Let's see. Probably the important people made a ton of money off this and everybody else lost all their money. So I would say that's a rug pull or a failed project. So now let's take a look over here at Luna. So just a reminder, in case you're not familiar with Luna, Luna topped out not too long ago, April of 2022, April 5th. So on April 5th, 2022, Luna's high was $119.50. Pretty good. Pretty good, $119.50. On right before this meltdown happened, it was $82 on May 5th. And now, over the last 3 days, every single day, it has been going down 99%. And you're like, how is that possible? Well, if you go down from 99% from $100 to $1, and then you go down 99% from $1 to 1 penny, and then you go down 99% from 1 penny to 1/100th of a penny, you end up where we're at right now. So keep in mind again what we just said here. This project was just worth $119.50, or that's what it was trading at. It was worth nothing. It was worth nothing. Let's be real. It's worth zero. But it was trading at $119. Now it is trading at 0.00007 pennies. So 0.01 would be a penny. So it's trading at 1/10 of a penny, 1/100th of a penny. It's trading at 6/1000ths of a penny. 6/1000ths of a penny. I mean, this is obviously a trash project, complete meltdown scam. You know, whether it was intentional or not, you know, whatever, it's a failed project because the algorithm failed, you know, whatever you want to call it. The fact of the matter is, it's now officially worth zero. So, you know, it's clearly trash. I mean, but, you know, I could have told you that a long time ago. So we still have people buying the dip. There was people, I mean, look at this wick right here. That's people buying. So there was people buying at 65 cents after it was over $100 a couple days before. Then there was people buying again at 2/10 of a penny. And then look, they bought and they thought, oh, I just bought the bottom. I'm a genius. I'm up ridiculous amount of money. And now look where we're at right now. 7/1000ths of a penny. I mean, that's a penny right there. 7/1000ths of a penny. I mean, if a project melts down, if it completely goes essentially to zero, I mean, it's 0.000007. So it's not technically zero, but, you know, it's about as close as you can get. Why would you be buying the dip? It just imploded. Like, how brain dead do you have to be when a project completely implodes and loses? I mean, this was we're talking about Terra was like the 11th ranked coin on CoinMarketCap. It was the 11th biggest crypto by market cap. It had the 11th most money in it from any cryptos. And now it went to zero. And there's still people trying to buy it. I mean, how dumb do you have to be? It just blows my absolute mind. I mean, if you were thinking about buying a car, okay, a specific car, and you were test driving it, and then while you were test driving it, you crashed it into a tree, it caught fire, it looked like it was about to explode, you got out of it safely, and then afterwards you said, yeah, I don't know, man. I mean, I still like the thing. It's not bad, but it's not in the condition I thought it was in, so I'll still give you an offer for it. The car is on fire, crashed into a tree, getting ready to explode. That is what's happening with Terra Luna right now. You could argue that the implosion has already taken place. I mean, why would you be buying this thing? It's literally just a matter of time before it gets delisted. I mean, you cannot keep this on your exchange if you're a responsible exchange. It's already been delisted from quite a few places. But regardless, this is just one of many blowups, in my opinion, to come. So think twice right now as you're like buying the dip, making all these decisions, you know, that this is really the decision you want to put your money into. You don't want to buy strength. You don't want to buy a real company. You want to buy a crypto that just imploded, with hopes that it will bounce back some and you'll become a millionaire. Okay, sure. Anyway, so let's take a look at the Bitcoin chart. Obviously, we got the meltdown. We've been discussing this. We specifically talked about the futures gap on our last stream on Wednesday. And the futures gap was down here basically at, what was the high on this? 24,605, 24,605. And then we came all the way down with this wick yesterday. And the wick came down as low as 25,350. So as far as I'm concerned, at this point in time, we all but filled this gap. I mean, this is our gap right here. right here, and we came down basically to right there. So there's still a tiny little bit of gap, unfilled, whatever. We got down at least low enough, to see the gap fill bounce. So now here we've gotten what amounts to the gap fill bounce. Well, this is a pretty aggressive wick, so that's always a good sign. It's a rejection of lower prices. We see one right here. We see one right here. When the wick is 50% or longer than the actual price action on the candle, that's typically looking like a rejection. The direction of the wick is which way the price got rejected. So the wick is to the downside, so we rejected downside like pressure. So basically, people were buying the dip on Bitcoin, Ethereum, all that, all the cryptos. What's important to pay attention to now is what happens next, because people are, of course, going to think, okay, that was the bottom. But the most important thing to realize is that we just put in a new macro bottom. So this was our previous bottom back here from in June of 2021, and now we put in a new bottom, a new lower low, a new close, as well as a new wick to a lower low. So at this point in time, there's nothing really telling us, hey, this is the bottom, because right now, what's happening? Well, we're putting in new lows. And it's like, okay, so that was the lowest low. So we're done now, right? Sure, if you want to catch the knife, and you're right, that was the lowest low, and we're done now. But what happens normally when you put in a new low is you put in more and more and more and more new lows. You continue to put in new lows. So this little reaction rally that we're seeing right now, while people are trying to get aggressive buying this, saying this is the bottom, I'm loading back up, I'm hodling, etc. I'm not saying it won't be the bottom, but let's be realistic. So where we're at right now, this trade is up 21% from the bottom on Bitcoin. So that's pretty good. We're up 21%, right? Well, I mean, over the last couple days, just from this previous push up here at 40,000, when I was talking about how bearish everything was, we just dropped down 36%. So we dropped down 36%, but we're up 20, so only another 16 to go, right? No, that's not how it works. If we look at where we're at right now, we're still down 23.5%. from that dump. Even after we push back up 20-something%, we're still down 23.5%. So if you were a hodler at $40,000, you're still down $10,000 per coin. So maybe you added at the absolute bottom, maybe you didn't do anything, maybe you sold, maybe you whatever, but regardless, still down. So we don't want to get too excited on these little dead cat bounces. When we look at this candle right here, or the candle before it, that looks pathetic. That's a pathetic little bounce to the upside after a complete meltdown. So, we're still under the 200 exponential and simple. We're still breaking to the downside. This looks like, to me, the reflex rally retest off of our low, off of our 200 exponential moving average, which we expected. And it looks like the bounce, the push back up to retest the breakdown level. So if we go to our monthly chart right here, well, what's it look like? It looks like we're breaking down from key levels, and then we're trying to push back up to hold those levels. So we'll obviously have to see where this weekly chart plays out to. But as far as I'm concerned right now, nothing has changed. A matter of fact, the actual structure of this chart is exponentially worse than it was. So when this closes here in 5 hours and 54 minutes on the weekly futures chart, it needs to close above 31,675. If it does not close above 31,675, we have a new weekly close. So we already have a new weekly low via this wick down here, but it got bought aggressively. But we need to see what happens at the end of the day today. So the real thing we're looking for is the close on futures above this previous low. And this low was from July 19th. And again, the actual open was 31,760. So again, we want to be above 31,700 roughly. Now look, we see this is rolling over. We see all red histograms. We see this on the weekly. I'm seeing nothing but weakness in this price action. This to me looked like a very aggressive downside dump, and then some people bought the dip, hoping that that was the bottom. And what's probably going to happen? We're probably going to go back down and revisit those lows, because we're putting in consistently. We have a high, we have a low, we have a lower high, and now we're putting in lower low. So most likely thing to happen is we continue to put in lower lows. So obviously we don't know for sure that's going to happen. We'll have to just wait and see. But as far as I'm concerned right now, I just expect us to continue putting in lower lows. Does not look good. Nothing looks good about this. So then our Bitcoin spot chart, obviously we'll have a couple more days before this closes. But again, we had that sell off down to 25,431. We filled that gap. now we're in the bearish control zone. We see our first green histogram. We're seeing a little bit of bounce back to the upside. If we switch to our weekly chart, we tagged the 200 exponential, actually overshot it slightly. We still had the 200 simple to the downside at 21,000. We'll have to wait and see. But again, we're going to look at our closes here. So our previous close was 31,776 on the spot market. So again, we have a couple extra days on this because it's not going to close till Sunday. But we want to see that close above 31,000, whatever I just said, 700 or whatever. Otherwise, again, we have a new low by a wick, but we don't have a new close on the weekly. So we want to see that be not a new low close if you want to be bullish on these markets. And then as far as the actual daily candle close, we already closed a new low on the daily candle. We already wicked down to a new low on the daily candle. So the daily is just telling us this is very, very bearish. Very bearish because we just put in a new low. So you don't normally see a new low and then that's it. That was the bottom. Everybody buys and then we just go to the upside. Normally you see a new low and then you see, dead cat bounces, attempted pushes back up, and then those fail, and then you roll back over and continue putting in new lows, and then eventually you carve out a bottom on like a daily or weekly time frame, at which point in time you can start looking for that. So what we're watching is the daily time frame. We have our stochastic in blue down here at that 7.67 level, and then here we have our stochastic in blue here at the 9.98 level. And we see this was our low up here, and this is a much lower low here. So we do actually have on the stochastics some bullish divergence taking place. We do not see that same bullish divergence on the TDMACD though. So we don't want to get too excited about it. And then obviously when we start looking at these other time frames, we see the weekly, we know what level we need to watch for that, obviously a couple days from now. And then if we go to the monthly, we can take a look at that and see what we're paying attention to. But at this point in time, this is what I've been talking about for literally months. Whenever we consolidate between the 8 and 21 and then we break down below it, that's where we see our capitulation move to the bottom. And then here we're consolidating between the 8 and 21 on the monthly, and then we break down, and that's where we see our capitulation move. Over the next 2 months, we lose over 50% of our value. Well, what happened right here? Exactly what I said. Exactly what I said. We broke down and we lost 40% of the value from this previous candle almost immediately. I mean, literally from the top to the wick, we broke down 43%. I said I was expecting at least a 50% break to the downside. So is the break over, or do we have the rest of the month and then another month of continuation down? Probably. We probably do. Is this just our bounce off of the slope line right here, before we lose it? Probably. Is the stochastics on the monthly, are they diverging from each other, getting further away, or are they converging towards each other, getting closer? Here they started to converge, and now here they went back into diverging. So on a monthly time frame, they're still diverging from each other, telling us this move is actually strengthening to the downside, which obviously I've been saying. So I'm just not excited about this right now. I'm not just going to turn around and all of a sudden be bullish on everything that's taken place. I think it's the opposite. I think now is probably, we're probably going to see one of the biggest sell the rips that we have maybe ever seen shortly. So we'll see what happens. Obviously, this is a pretty bullish candle, a rejection of lower prices, but in no way does that mean that that's the bottom and we're going to go higher. The least reliable thing is a single candle. Then we have a candlestick pattern. Then we have some of our other things that we pay attention to. But at this point in time, we came down here. We hit some targets almost, perfectly. We basically made it to exactly what we were looking for. We closed at the low wick previously. We came back up and got a push back to the upside. So the real question is, what's going to happen from this point? And you guys see on this chart, how long have we had the 5-wave correction to the downside in place? And what just happened? We basically came almost all the way down to our 3 target, which was at 24,422 level. So now do we bounce back to the upside and we put in our 4? We come all the way back up to 34,701, and then that's the top of the 4, and then we continue lower. I don't know. We'll have to wait and see what happens, but obviously we have this sort of map. We don't know which direction, crypto is going to take on this map, but we know that there's only so many directions it can go. There's only so many ways that it can move. So we're just paying attention to those ways, and then we're going to go from there. It does seem very strange that this is still not showing up in like the search and everything. I really don't know why it's not. When I look over here at our data, everything says that we're normal. Give me just 1 second, because it's still not showing up on here. Very interesting. Maybe something is not set correctly. Okay, I just changed some stuff up. So let's see if that corrects it maybe. I'm not sure. And you should be able to go back and watch the beginning if you weren't able to see it. Okay, it's showing up now. So hopefully whatever that issue is, that is corrected. And everything is good now. We shall see. Let me just check one more thing really quick. All right, there we go. It appears to be working now. So we'll have to may have to go back and watch the beginning of the stream if you were not able to see that. But I do have it showing up and everything now, so it should be all good. So that being said, I don't want to get too excited about this Bitcoin bounce. I mean, this looks like a dead cat bounce to me. It looks like a dead cat bounce in everything across the entire stock market. So next we have Ethereum. So obviously Ethereum hit our target as well. Went all the way down to 1700. So we see not only did it tag the 236, but it tagged our green support right here as well. So, you know, basically just played out perfectly. This is exactly what we were looking for, and it literally played out 100%. So there we go. Hey, what's going on, Sol? So can you hear me okay now? Is everything coming through clear? He said, hey, nice to see you online on this green day. Do you think it's just a rebound because naturally a lot is oversold and soon we're back down again? I believe so. Yeah, 100%, man. This is a dead cat bounce for sure. What's up, Manny? Good to see you. Good afternoon. Sorry, there was some issue with the stream visibility. Now it appears to be working correctly and everything, but you can go back and watch the beginning of the stream, I believe, and you should be able to hear exactly what I said. I just talked about Terra and Luna a little bit, and then basically just did our Bitcoin, and now we're on Ethereum. So Ethereum tagged the 236 at key support. If it breaks down from this level, the next target to downside is 382. That's $1,000. That's, you know, almost, it's another 50% down from where we're at right now and below the previous peak of 2017. So we need to pay close attention. If we see any more weakness in some of these cryptos, we're going to start violating key levels. Next, we have Bitcoin dominance. So look, we finally got that exact Bitcoin move I've been talking about on dominance. Bitcoin dominance weekly chart just shot up to the upside. Cryptos completely melted down. All the trash just got destroyed, full on dumpster fire status. And now even after the bounce rally that we saw in all the other trash that has taken place, we're still just at the resistance point. So we know we have 3 touches on the bottom right here with bullish divergence. And then we have clear resistance 1, 2, 3. This is our 4th time testing the resistance. If and when we close at or above this resistance, the measure move is just the range from the bottom of the channel to the top of the channel. And then that would give us our measure move to the upside, which would take us roughly to 51. So, I mean, every target we've had for the last couple weeks, days, months, just got hit. So, I mean, at this point in time, we need to go back through and reevaluate all of our targets because we were already right about everything. Everything literally did what we said. We'll go into like the stock market soon and we'll see what this move was. And all we did, in my opinion, was we came down to key levels, and those key levels are areas that the market in general is going to see as support, key Fibonacci's, key supports, etc., moving averages. And now all we're doing is we're just finding a temporary bottom. Now, is this going to be a tradable bottom? I mean, sure, a lot of stuff has moved already 20%. You know, we've already taken some amazing scalps off shorter term divergence. But are we going to see continuation? Is this the bottom? No, I don't think it is. There's nothing in any of these charts that tells me this is the bottom. Nothing has changed. Nothing is better. Everything is not priced into the markets like people say. It's actually the opposite. Nothing is priced into the markets. That's why we keep selling off, because nothing is changing. It's not getting better. It's not getting worse. And the market keeps going down. So how is everything priced into the markets and that we keep going down constantly? It's not. The markets have priced in some things, but I still hear the same people. People are still buying the dip on crypto. People are buying a project that just imploded. Luna has lost 99% of its value like 4 days in a row. So if you bought the dip after the first day and you said, I'm going to put $100 in this, the next day you wake up, you have $1 left. So then you say, I'll buy the dip again and I'll put another $100 in it. And then at the end of that day, instead of $101 left, you have $1.10 left. And then you say, well, I'll just buy the dip again with another $100 the next day. And then you have $1.10. And then you wake up the next day and you have $1.11. So you just spent $300 buying the dip after a 99% correction and you have $1 left. How many times can that happen? I mean, it's going to get delisted. It's garbage. The thing is trading at 8/1000ths of a penny. The stablecoin is trading at 18 cents to the dollar. I mean, it's failed. It's a failed project. It's garbage. It has imploded. Sorry, you got scammed. You fell for a scam or bought a trash project that went to zero. There's going to be thousands and thousands more. There's almost 20,000 cryptos right now, and probably a quarter to a half of them will go to zero or somewhere very, very close. So right now, I would say there's probably a 50% chance for every crypto you have that it goes to zero. Luna and UST were in the top. I mean, what, UST was like the 11th biggest market cap? Or maybe it was Luna. I can't remember. One of them was the 11th biggest market cap in crypto, and it just went to zero. It literally went to zero. I mean, come on, guys. Let's not buy the dip on trash. If you're going to buy the dip on something, buy the dip on a decent project at least. So here's our weekly total market cap for crypto. So we came down exactly to the 200 exponential moving average. We did hit 1.07 trillion, our exact target to the downside, exactly what we discussed in the last stream. So obviously playing out extremely well. Once again, I literally said when we're at 2 trillion, I said our next target to the downside is 1 trillion. So what is your crypto going to look like when the market cap goes down by 1 trillion? Well, you can look at the charts over the last couple of days and you can see, obviously, we've nailed everything, completely nailed it. What's going to happen next? Well, we have to wait and see. At the end of the day, at the end of the week, we see where these closes are. As long as the total crypto market cap does not close our weekly below the previous close from July, that's an okay sign. It's a kind of good sign. I mean, we're at the lows, but at least we didn't put in a new low. If we continue to put in a new low on something, whenever we put in a new low, it's like one of those clocks at work. If you've ever worked at a factory or seen one of those signs like on The Simpsons or something, and it's like, 365 days since last incident. And then once there's an incident, it resets. And then it says 1 day since last incident. Somebody got injured on the job or whatever it is. That's how I look at lower lows. Okay. When we put in a new lower low, it resets the clock and we go to 0 days since lower low. 0 days since lowest low. And then we pay attention to that. And the longer it goes without putting in a lower low, the better it is. But the day that it puts in the new low, you don't go, I'm just going to buy the dip now because we just put in a new low. No, that's the worst case scenario. The worst scenario is that we retest the lows and then we print a lower low. Now, is it possible we get a scenario like we did to the upside where we come up here on like Bitcoin and hit 64,000 and then we come up again and hit 70,000 and then we melt down? It is always possible we put in a lower low and then we go higher. But we need to look for bottoming signals on at least short to mid time frames, 4 hour, daily, weekly, etc. But none of this looks good to me. And it's the same thing. We get a nice bounce on some of these things. Like Matic had a really nice bounce off of our exact target. But what did Matic do? It bounced up 52%. Well, that's great. It bounced 52%. That's awesome, right? Well, in the 2 days before that, it lost 46%. And you say, okay, it's down 46%. It's up 52%. So we must be higher than we were at that point in time. But we're not. We're not, because it's calculated differently. we go down 46%. In order to get back to where we were for that down 46%, we need to go up 86%. So 46% down is the equivalence of 86% up afterwards. So if you have $100 and you lose 46% of it, you have $54 left. So if you go up again by, let's just call it even number. Let's say you have $100, you go down by 50%. You now have $50 left. And then you're like, okay, so we just need to go up by 50% and I'm fine again. So your $100 became 50 when it went down 50%. And then if your $50 goes up 50%, that's only $75. You're still down $25. So if we go down 50% on an investment, on a speculation, on some trash bag coin, all we have to do is go up 100%. And then we're back to even. And it's the same way if we go up first. If you have $100 and then it goes up by, let's say 100%, we'll just use the inverse of our example. It goes up 100%, you now have $200. But then it goes down 50%, your $200 gets cut in half, and now you're back to $100. So literally 50% down is the equivalence of 100% up, no matter which one happens first. So that's why the most important thing is protecting ourselves from losses, not just trying to make gains. So anyway, hopefully that makes sense. So let's take a look at, and I know most of you guys already know that, but there's always new people on here. And I don't think people fully understand. You know, if you're, let's look at the extreme example. Let's say you have $100 and you put it into Luna at $100. You bought Luna when it was $100. And then let's say it went down to $1. It went down 99%. And now it's worth $1. How many percentage does your $1 have to go back up to get to 100? Well, if it goes up 100%, it's going to be at $2. If it goes up 1,000%, it's going to be at $10. It has to go back up 10,000%. So losing 99% is the equivalence of gaining 10,000% to break even. So if you bought at $1 and then it went up 10,000%, it would be worth $100. And then it went down 99% and you're back to $1. Or vice versa. If you bought it $100 and it went down 99%, you're at $1, and then it needs to go back up 10,000% to bring it back to $100. So what is the chance of a project that just imploded and went to zero? It went down 99.99% over that. It went down, it literally went to zero. What is the chance of that ever coming back to its previous all-time high or to $20 or $50 or $100? It's zero. It's a 0% chance. I mean, it's not zero. It's really not. Like, technically, it's not zero. But, I mean, I would say it's zero. Because you're never going to get those people to come back in. You're never, at no point in time, ever in the future, will Luna be able to attract enough money back to the project after it went down 99.99% that it would go back up. Unless Michael Saylor takes over it, and then you could get a MicroStrategy type scenario where MicroStrategy goes down by 99.9%, and then, 20 years later, he comes back and starts scamming again with Bitcoin and MicroStrategy. So is it possible? Sure, it's possible, but you have to be the #1 most scammiest scumbag charlatan, someone like Michael Saylor, to ever be able to do something like that, to ever be able to pull it off. Can it be pulled off though? Sure, it could come back, maybe. I mean, do you really want to hodl Luna at 8/1000ths of a penny and hope that it comes back? Or would you rather buy something legitimate that's not going to go to zero to begin with? Probably that would be a good idea. But anyway, so Matic hit our 786 literally to the T. I mean, you can see the wick is literally on the 786. So obviously that was our target to downside. We talked about the 618, and if we lost that level, we were going to the 786. We have tagged the 786 perfectly, and now we're just getting a dead cat bounce. So just looking at this chart, once again, what are we paying attention to? We have a high. Then we have, arguably, depending where you want to look at this, we have a high, a low, a lower high, a lower low, a lower high, a much lower low. So what do we expect next? Probably a lower high. So is it at the 618? Is it at the 0.5? Is it at the 382? I mean, we'll have to wait and see. We don't know exactly, but we have key levels to watch. But the fact of the matter is that this is a meltdown taking place in crypto. So the meltdown doesn't just stop with a V bottom like everybody's used to. I mean, you might see an initial V bottom, but we'll see where we close at the end of the day today. So Avalanche, again, complete meltdown. When we looked at this on, what's it been, 2 days? when we looked at this on Wednesday, it was up here. It was 44.90 or whatever. By the end of the day, it's $22. It went down 50% in a day and a half. I mean, that's just wild right there. That is just wild. I mean, these things are just completely melting down. And there's nowhere to go in this one. We hit the 1.618. Maybe that was some kind of tradable bottom. I mean, it hit $22. And again, this thing was just at, 146. So, I mean, I would just be real careful with some of these trash projects that are this far off their lows or highs already. Solana next. Complete meltdown in Solana. This thing was $260, and it just went down yesterday to $36. Again, I mean, these projects are completely melting down. It was down 85%. And what have we been talking about this whole time? Well, we expect altcoins to go down between 85 and 99%. And now we're seeing that play out perfectly. So now it's like, oh, is this the bottom? I mean, I don't think so. Because how do you know that the one that just went down 85% isn't going down 99%? It just hasn't gotten there yet. I don't like how any of this looks. It all looks like total trash, and it's all been completely predictable. I mean, we've seen all this coming. We came down here, basically tagged the 786, bounced back to 618. Same exact thing. All these charts are trading very, very similar. Monero is next. Obviously, this thing had a complete meltdown, as we discussed. And this is the exact scenario that we were talking about, why it was so important to take out this peak. Because now look, is there any technical damage done to this chart? Or does it still just look like a complete trash crypto that's completely melting down? That's what it looks like to me. Here's our high. Here's our low. Here's our lower high. Here's our lower low. And then look, oh look, another lower high. And now look, another lower low. So we're completely continuing to just melt down. Monero is still trash. It's still garbage coin. We came down to the 0.5 perfectly. That is the macro 0.5 all the way from the low in 2020 all the way to the high in 2021. And then we've done a 50% retracement. So now we're bouncing back up. We're attempting to retest the 382. And then at that point in time, I would expect a rejection and more lower prices. None of these look good. I mean, they look like complete trash. Now, is it possible to trade some of these bounces here? Oh, for sure. We got the buy, sell, buy perfectly. I mean, this is a perfect divergence bottom signal right here. And it perfectly picked the bottom. But it's not going to be the macro bottom. It's just going to be a tradable bottom, which obviously, depending on when and if you would have took the signal on this, it would have been at the close right here when this printed the hard buy signal and the bullish divergence signal. So it would have been a nice 10% move right there. Or if you were trading Bitcoin, there was a very nice 4-hour bullish divergence push down that I traded. That was a nice, what was it, like 10 or 12%, something like that, depending where you entered. But the fact of the matter is, this doesn't change the actual chart. It actually makes the chart look much worse, because not only are we clearly in a bear trend below 200 exponential and simple, trending to the downside, not only are we putting in lower highs and lower lows consistently, we literally just put in a lower low. So days since incident, days since lower low, I mean, not even one. This was the lowest low, and then this is today. So congratulations, guys. We made it 16 hours so far without putting in a new low on cryptos. Wow, that's great. So let's get bullish now, right? No, hell no. Algo is next. And again, this is my point. I was talking about this on Wednesday. We were looking for scalp bottoms, potential scalps to the upside. But what do? We take these positions, we scalp it, and then we take the scalp and we go. We don't hold these things. They're not positional trades. They're literally just quick cash. We're just extracting money from the losers in the markets. And then we're just getting out. We do not want to be stuck holding these cryptos. So next we have Algo. Algo hit our target perfectly. The 618, absolutely beautiful. Nailed our box buying area, broke down from the channel, and now it is back inside the channel. So again, potential target to the upside would be either the 0.5 or back up here. Every one of these charts has literally hit our exact target to the downside or to the upside or whatever. I mean, these markets are trading so technically, it's unfreaking believable right now. I mean, unbelievable. So we already took a look at this. Obviously it has lost its peg going to zero. We are at 7/1000ths of a penny on Luna. So for all you dip fires out there, congratulations. Anyone that had bought the dip over the last couple of days just lost 99% of their money multiple times over. Congratulations on that. No surprise. I was talking about Luna and Do Kwon and how I thought it was a trash bag scammer. Everybody was talking about how it was a huge bullish catalyst. They were going to buy $1.5 billion. And I said, sure, if they say they're going to buy $1.5 billion, that's definitely a bullish catalyst. Unless they change their mind, unless they decide to sell, etc. And then what happened? Literally exactly what I said happened. They were forced to sell, whether they wanted to or not. So that $1.5 billion bullish catalyst actually ended up being a bearish catalyst. So that's my exact point. All these like bullish arguments, all these trash bag coins that don't do anything, you have to be so careful with these, because that's what happens in the end. You lose 99% of your money and you feel like a moron. And you know what? Luna has been outperforming pretty much everything lately. So it would not surprise me to hear a lot of people had just about everything or their life savings or their life gains or whatever in Luna and just lost everything. Would not surprise me in the least bit, because people get greedy. They put more money in at the top as it goes up. They dollar cost average up into some trash bag crypto or coin or whatever, and then rug pull, and now you lost everything because you got greedy. Cool Sheet says, Duquan better go into protective custody. I mean, I'm sure he has everyone's money, so he probably has billions of dollars he can go into protective custody with. Cool Sheet says, meanwhile, he's trolling the plebs on Luna's Twitter. I seriously wouldn't be surprised if Dung comes up missing. I mean, maybe. I mean, he's probably got billions of dollars. Somebody made money on this. Not everybody just lost here. It didn't just implode for no reason. Somebody rug pulled. Somebody just made hundreds of millions or billions of dollars. And it was probably the people in charge. So anyway, we'll get into some actual real assets now. Let's look at TNX. So TNX obviously been selling off pretty heavy. Got a nice little bounce. We got the hard sell signal. We left the bullish control zone. All red histograms. Looks like it's going to be cooling off here for a little bit. So this obviously ties in with our bond rally we've been talking about. So it does look like the bonds have put in their low, at least for now, at the bottom of the channel. Reclaimed the channel right now, and then we're consolidating at that level. A close at this level is bullish in my opinion for bonds. Obviously, once again, we nailed our target perfectly. So we'll see what happens from that, but I would expect bonds to rally probably somewhere around that 130 level. If we see this continuation. We did obviously have bullish divergence here at the bottom, so it was pretty easy to pick at least a tradable bottom on the bonds. You know, and we've been discussing how the money has to go somewhere, all these outflows from the stock market, and right around when you start getting around like, 3% is when people say, okay, do I want to be in bonds or do I want to be in stocks? Say for instance, the S&P is paying a 2.5% dividend yield and bonds are paying 3%. It starts looking appealing now. You're like, okay, I'm going to take less risk by buying bonds instead of stocks and still get the same yield, but without the upside potential, theoretically. So next, and who knows at this point in time, I mean, bonds are down more than stocks, indexes at this point in time. So there really is no functioning playbook at this point in time. It's sort of just like winging it. So U.S. oil obviously has been consolidating at this lows and then trying to break through the highs. We'll see what happens here. We're back at 110. Again, until we break through 114 or below 94, we're just trading in this range as far as I'm concerned. We are seeing the histogram trend up. We are seeing the stochastics trend up. I am still very bullish on oil long term, but now right this second, got to be real careful here. So next we have Dow Jones. So once again, another target literally hit to the penny. So we have our 236 macro fib right here, which was obviously our initial target to downside. We nailed the initial target. We bounced back up. We're retesting resistance. What was support as resistance. So we'll see what happens. I still have a macro lower target on this, but this is exactly where we would expect, obviously, to see an initial bounce. Everything else has shot to the downside more powerfully. So like the 236 on the SPY, we had already hit, and we then overshot, and now we're back rallying at it. So we're at what would have been support. So we overshot it a little bit. We're at the heart line of the channel. We're in the greenbacks area again. Once again, things just don't go straight down. So we've had countless days in a row of just melting down, and now we have 2 days up, a bottom, and then 1 day up after that. So not surprised at all here. IXIC, NASDAQ, hit the 382, overshot it slightly, made it into our green box area, and we'll know that this is because of our weekly chart. If we go over to the weekly chart, we see here perfectly, we hit the 200 exponential. Obviously, if we would have shot all the way down and hit the 200 simple, that would have been the bottom of the box. And then obviously the top of the box was the 382. And then we obviously hit the 200 exponential in the meantime. Again, these candles look okay for now. And if we were to just close the week right now, it would look okay. But we still have an entire day to see what happens in the markets. Still not great because we're putting in lower lows, but at least it would look like, you know, at least a temporary type of bottom. And then next we have the Russell. So again, Russell completely melting down. If we turn on our Fib tool, and I discussed this last stream, if you do not have your Fibonacci from the bottom of the lows, from the Rona dump to the top of whatever asset you're looking at, you need to do that. That's an absolute necessity. And you know what? While we're here, let's talk about this also. I keep my charts typically on log scale. There are a lot of new people in the channel, in the group, in, you know, following, etc. When you click on your Fibonacci after you draw it, double click on it. Or not. Hello. All right, let's try a different one because TradingView is being a tard. I mean, really? Okay, apparently TradingView has gone full retard. But if you right click on this normally and then you go to settings, it will bring up a settings sheet, or you can just double click on it and it will bring up settings, or you can click on it once and then click this little gear right here and it will bring up settings, unless you have a retard TradingView like I do. In which case what happens, it'll bring up a thing, scroll all the way down to the bottom of the menu that comes up, and then there's like a little box that says fibs based on log scale. Make sure you select fibs based on log scale, because that will make sure that when you're on log scale, your fibs are on log scale as well, so they make sense. If you do not do that, it will put your fibs in weird places that will not make sense if you're looking at a log scale chart. So that is an absolute necessity. But as far as the Russell, we see once again, we hit our green box area, we hit the 382 perfectly, and now we're getting the bounce. So literally everything has done in this recent move, whether it was crypto, whether it was stocks, whether it was whatever we look at, has literally done exactly what we said was going to happen. So, I mean, if ever there was anyone who nailed it, I would say we nailed it. So continuing on down the line, you know, and we'll nail the next move too. We just got to take a little time, figure out where that's going to be. XLE is trying to get an aggressive bounce here, saving the 821. Again, maybe we get the exact touch at the top. Maybe we go higher. Who knows? We have, at this point in time, 1 drive, 2 drives, 3 drives, 4 drives, and now we're potentially working on a 5th drive of bearish divergence, because we have a high, a higher high, a higher high, a higher high, and then potentially come up here, put in an even higher high, and then here we have a high, a lower high, a lower high, a lower high, and then potentially another lower high. So 5 drives of bearish divergence. Is this trend sustainable? No, because that's what bearish divergence is. But in the meantime, it's still on the way up, but it looks like it's very close to breaking down. Maybe that 5th drive will be the one. XTN, but you know, it's tough when everybody's crowded into like a certain trade because it's the only thing that's working. Today we see a little diversification in the markets. I would expect people to be taking profit on energy and buying some of the other trash that's beaten down so bad. So XTN, transportation, again, we came all the way down to our target, hit the bottom of the channel perfectly, and then push back up to the heart line. You know, still look, all these things still look trash. Anything that just put in a new low looks like trash. Because what's going to happen, it's going to put in another lower high, and then it's come back down and put in another lower low and hit one of our other targets to the downside. XLF broke through the bottom support line right here. New low, complete trash. XLV came down here, retested the lows, holding strong for now. So healthcare actually looks better than most because it didn't put in a new low right here. So we just put in the highest high of this trend, and now we're not putting in a new low, which is good, but we're still in a bear market. 200 exponential and simple have rolled over. Looks like we're going to get some kind of bounce from this support level. We have 2 green histograms. We're trying to roll back up and potentially leave the bearish control zone. We're bouncing key support level, at least attempting to go higher. XLU, obviously we are continuing to hold support right here. That's perfect. I would like to see a wick down, hit the 200 exponential and simple, get rejected of lower prices and then go higher. But in the meantime, I expect we'll consolidate around here as people kind of move their cash into more risk-on plays, as that is one of the safety trades. XLP, consumer staples, again, came all the way down to the 618 perfectly, and now it's holding support. Did not quite hit the 200 exponential and simple, so maybe it does get another push lower. I mean, these are just the safety plays, really, though. XLRE, so real estate, new low. Obviously, the first trade has played out perfectly. That was a quick little 12% to the downside. We're well on the way to the 20% to the downside. Got a little bounce back up, but again, new low. And it looks to me like we've broken down from our head and shoulders pattern. We're retesting the breakdown before we go lower and potentially hit the measure move. Looks bad. VWO, new low on the Vanguard Emerging Market Fund. Hit the 0.5. That was our target, obviously, to the downside. We'll see what happens from there. We do still have our macro target all the way down here at like the 786 or at like the $36 range. That's what we're paying attention to when it comes down. Does it come down to those levels? Next, we have Dax Germany. So almost hit our target, a couple pennies off or a couple bucks off here to the upside. But it does look like it's trying to rally back up, trying to cross back over. Looks okay for now. Still well off of our potential push up here, which we're obviously expecting a retest of a 200 exponential and simple. So far at this point in time, we have a low and then we have a potential higher low swing. So now if we can come up here and put in a higher high, we can now argue that this thing is trying to create an uptrend. Now, what do I think happens? It probably comes up here and gets rejected and then goes lower. CN50 China. So again, China trying to rally back up and reclaim the 821. Eventually, if the 821 flips back over green, maybe we get the push back up to 200 exponential and simple. It is trying to put in, again, some drives of bullish divergence here. So here we see a low, we see a slightly lower low. Here we see a low, we see a slightly higher low. So we have bullish divergence between these 2 points. So typically I like to get 3 drives of bullish divergence, but if we just get this and then it pushes up here, crosses the 821 back to the upside, I think it's very likely we hit that 1466 target. UK 100, again, showing some serious weakness here, but not putting in a new lower low. Broke down below 200 exponential and simple. Got a powerful push back up. I do expect this to get rejected at the resistance/support line in yellow right here. Looks okay for now, better than most. EWZ, again, didn't quite make it to our target to the downside. We wanted to go slightly lower, but we all but got to the green box area. At this point in time, I'm pushing back up here. I do expect this to go lower. I really want to see this retest that key level and see that key level hold. We don't want to see this just kind of bounce up out of nowhere and then push back up. It is possible it happens. It got like front run a little bit. We did get the divergence signal, the buy, sell, buy. If you bought on the buy, that was literally like, a couple pennies off the bottom, and it has already started moving up from there. Not a ton. I mean, this thing didn't move a lot. So, but overall, everything's just playing out perfectly. I mean, all these charts are literally behaving like the good little bitch that they are. DXY put in a new high. Obviously, I mean, I can't even say it's starting to show signs of topping. I mean, it's all red histograms, and it just keeps melting up. I'm not trying to pick the top on this thing as it continues to just go, absolutely parabolic. So, but it is looking a little tired. It can only stay up here for so long. TSLA, old Tesla, put in a new low. So obviously that is a big deal. So closing at the low, wicking lower low. So that is a bad sign. We just put in a new low on Tesla. So we maybe get a bounce back up here to 900. Maybe we stop right here, but I do expect lower lows as we just put in our lowest low wick and also closed at the lows. I think it's just a matter of time before it continues to melt down. The last thing we want to see is a new low if we're trying to get bullish on something. That is the last thing we want to see. We want to see it not put in a new low and then rally off that not new low. And then we can start saying, hey, look, we put in a higher low. But that's not what's happening. We're putting in lower lows. So that means an asset is trash. NVIDIA is next. So obviously NVIDIA made it to a weird place. So we were looking for potential support to hold at 618. It did not hold. We went slightly lower. Did not make it to our next target, but now we're back at that potential 618 area. So the question is now, is it time to take this trade, for the potential rally back to the upside? So if we're going to get a retest of 200 exponential and simple, that's like a 25% move. If we're going to take out at this point in time, we have a defined low for a close, so we can actually tighten up our stop loss. If we take out that 161 level, that's an 8.5% stop. With a 25% target to upside, that's over 3-to-1 risk-reward ratio. That's pretty nice. Now, obviously, we're trading counter trend, but we're looking at potential bullish divergence developing between these 2 points right here on both our indicator oscillators. So we want a second green histogram right here, and then we can confirm bullish divergence. We obviously see, you know, the cross has taken place to the downside, but it's trying to roll back up. And we see the knife is angled powerfully to the upside. So it looks like this wants to see continuation. Now, could it top out at 200 and roll back over and go lower? Sure. You know, does not have to make it all the way back up here to our target, but we have a favorable situation where we have at least a 3-to-1 risk reward ratio, which is what we want when we're taking a counter trend. And if you didn't watch the last video where I discuss why we want 2-to-1 when we're trading with the trend or 3-to-1 if we're counter trend trading, highly recommend you go check that out. It's very important. So Apple is next. So Apple came down to our yellow support, made it to our blue box, didn't quite hit the 236, which was technically our target to the downside. But as far as I'm concerned, we made it into our entry level box right there. So since then, we've had a nice bounce back up. I would expect this, you know, red resistance, well, was support to act as resistance when we get back up to it. All red histograms still. So we're seeing a bounce, but we're not seeing any actual strength on these charts. Microsoft is next. Again, all red histograms. I was warning about Microsoft, how it better be careful because if it broke down from this level, it could let go pretty quickly. Obviously, didn't quite get down to our target, didn't quite get to the blue box, but overall, still looks better than most. But at this point in time, it's hard to deny that we didn't just break down from a, you know, topping pattern. I mean, this just looks like a giant head and shoulders that we broke down from. So this little attempted pathetic push back up probably gets rejected and sold into, and then we go lower and we play out the remainder of the move to the downside. So Amazon, okay, so I've been talking about Amazon going to $2,000 for the last like couple weeks, maybe a month now. Sure, I was right. I nailed it. It was a perfect call. We hit our exact target to downside. We hit $2,042 perfectly. Sure, 100%. I did not expect Amazon to get here in 2 weeks or a week or whatever. I mean, that was extremely fast. Do I look at this as a buying opportunity for Amazon? I mean, this is a very strong resistance right here, and we bounce off of it. So this is probably going to result in some sort of like tradable bottom. Now, it does not mean it has to be the macro bottom. Does not mean that there's going to be a favorable trade setup here necessarily. But you could argue now that we've hit our target, that, you know, we could see a 22% rally or something like that. I mean, we've already rallied 10% from the bottom right there. But at the same time, you know, let's just remember, not that long ago, people just got trapped in this trade at 3,700. So there's a decent amount of people that literally just bought and lost 50% of their value on Amazon. So we got to be real careful on these. Next, we have Netflix, aka Loserville. So everybody that ever bought Netflix back to 2017, this was our target we were expecting. So if you bought Netflix anytime from 2017 to now, you are officially a loser. You have lost money unless you bought it literally yesterday, in which case you're probably up like 4%. So in my opinion, Netflix still looks like trash. All it's doing is just wiping out literally years of gains and putting in lower lows. So maybe when we hit the 382, I'll pay attention to it. We blew through the 236. We have gapped down multiple times and no buyers have showed up. So I don't think all of a sudden it's like, oh, here they are. Here come all the buyers now. Yeah, okay. Google is next. So Google broke down from the 236, been consolidating at this level. Did not get to the 382, but it is showing some strength here. So it didn't hold key support. It overshot it. There's no real area we're looking for a bottom. We're seeing some potential bullish divergence here. This just looks like an ugly chart right now. We'll see what happens. If it gets back above the 236, maybe there's a continuation trade back to 2,500. But I just don't think the percentage is going to be there on this. But it held up a hell of a lot better than Amazon did. And then Facebook still just looks like absolute trash. Again, didn't quite get down to our 786 target, holding on to the 618 target, holding on to the ascending support of the broadening wedge, ascending broadening wedge. So maybe it pushes back up here again. Each time inside of this, it's been going lower and lower. So it's hard to get bullish on these things right now. Like, I get it. You see the market, everything's green. Stuff went up 3%, 5%, 10%, 15%, but nothing has changed. Nothing has changed. All these things are still lower than they were a couple days ago. This is not 2019. This is not 2020, 2021. This is not the buy every dip environment, in my opinion. Obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. So gold did exactly what we said. I told you, as long as we're between the 200 exponential and 200 simple, I'm at least neutral on this. If we break down and close below the 200 exponential and simple, I start getting real bearish on gold. And that's exactly what we did. We lost all of our key levels of support. When we came down to this, I said this area should hold if we want to be bullish on gold, but I don't think it will. I expect us to go down to this level. We came down to this level. It held temporarily. And I said specifically, if we break down below 200 exponential and simple, this is going to look real bad. And we start putting our drawing tools back on. We have some key support levels. We have this blue support level here, and it depends on what time frame you're looking at. We have a green support level here, depending on what time frame you're looking at. So if you're on the daily, one is going to look more important than the other. If you're on the weekly, the other one looks more important. So matter of fact, since we're coming up on the end of the weekly, let's go over to our weekly chart right here, and we'll see that since we had this low right here, the weekly has not closed below our blue support. So that's exactly where we're at now. So if our weekly closes at this blue support, you can still argue that we're putting in higher lows and that we have a higher high and then another higher high. So you could say we have a low, then a high, then we have a higher low, then we have a higher high, then we have a higher low. So then we could potentially come up and put in a higher high. You could definitely say that. But this doesn't look good. This is not what we wanted to see. We wanted to see the red support hold right here. If you're bullish on gold, which I'm not. I have not been bullish on gold. I've told you that many, many times. We have a hard sell signal now. We have a bunch of red histograms. We see the 8 and 21 on the weekly are getting ready to cross the downside. And where are they pointing? They're pointing to the 200 exponential and simple. So another retest of like the 1600s. This is not what a bullish chart looks like. We failed to break above the previous all-time high. We failed to close higher on a weekly chart. The daily was like around the same level. And now we're just rolling right back over. And what does that remind us of? Oh, look, exactly what we've been paying attention to for literally months now, arguably years. This same exact scenario. We look like we're getting ready to break down. We're putting in a big descending triangle, and then we get a rally back to the upside. This one was less impressive right here than the previous one. We didn't even make it back to the previous all-time high. And then what happened? We rolled over, and then after that, gold just continues to just absolutely melt down for years after that. And loses, I mean, it's something crazy. It's like almost 50%. 41%. Loses 41% of its value over the next 1,239 days. We're talking about 4 years and 40% meltdown in gold, if that scenario happens again. So does this look familiar? I mean, it does to me. This is the exact worst case scenario. If this 821 crosses back to the downside, I mean, it's all but inevitable. We basically fill out this descending triangle bottom or retest this descending triangle bottom. So we'll see what happens from there. You know, I don't want to be bearish on gold right now. I love gold. I think it's great. It's real money for sure. But the environment, the chart, doesn't look great right now. So we're back at the monthly 21. You know, if we close at or below this level, it's going to look bad. The 21 has held us up the same way that ascending support line has, and we don't want to lose that. If we lose that 21 ascending support, the next thing that happens is the meltdown. You know, we see it here. As soon as we close one close below the 21, we retest it, 821 crosses the downside, and then we see a complete meltdown in gold. And then again, we came back up, hit the blue slope line, and got rejected. And that oftentimes is one of the most powerful rejections and leads to further downside price action. Again, we can look at it right here and see the exact same thing. We push up, we flip it back blue, try to come back up, get rejected, and then it rolls over. And that is literally the beginning of the end. I mean, this is literally the top right here. So gold looks exactly, I mean, I can't say exactly. It looks closer than it should, eerily similar to exactly what happened in 2011. So is that going to happen all over again? I mean, what did 2011 look like? Why was everybody bullish on gold? Why did it fail? Arguably, XAG, the old silver bullet. So obviously we see the follow through that we were expecting on silver, complete meltdown, new lows. Silver has completely violated these levels. It is just melting down. It was at $20 earlier today. It was like $20.50. So it's back up above 21, but new low, new cycle low. So we put in our peak back here, our high by closes. We put in a second one, double top, arguably a higher wick, and then we have just completely melted down from there. So get ready for silver's teenage years. Old Benjamin Buttons about to get a little bit younger. And by younger, I mean its price is going to go down into the teens. So obviously silver is trash. We know that. I'm a strong believer in silver, but it is what it is. The charts don't lie. So let's talk about this, our gold-silver ratio chart right here. So I've been expecting a tag of the gold-silver ratio chart of 90. Today, we saw that burst to the upside when silver is getting crushed, and we saw a we saw a high of 88.95. Is that close enough to 90 to count it? I mean, I would say so. So is gold topped out in relation to silver, and now silver is going to strengthen? Maybe. Maybe it goes much higher. Maybe it goes to 618. I mean, basically tagged the 0.5. That was just one of my targets. The top of my target range is a 618. So maybe we go to 97. Maybe this thing goes higher. I mean, we just technically started trending back into a bull market. We're back above 200 exponential. We're back above 200 simple, and they're both blue. So last time that happened, we went on like, multi-decade like run and new all-time highs on gold-silver ratio. So as far as I'm concerned right now, the gold chart and the gold-silver ratio chart are telling us silver is trash. And we got to be real careful with gold, let alone with silver, because we know the majority of the time when gold is going up and silver is going up, silver is gaining on gold. It's getting higher percentage gains faster. But when gold and silver are going down, silver is usually going down much faster. So if we see the gold-silver chart is strengthening, that tells us more likely than not it's strengthening because gold and silver are going down. And again, that's the same thing the Bitcoin dominance chart was telling us, why we've been expecting this big dump in crypto and how we perfectly predicted the complete crash in advance. We literally saw the Bitcoin dominance chart putting in triple bullish divergence on the weekly and a clear defined channel, and then all of a sudden we break to the upside. Well, what does that tell us? Well, if all of a sudden Bitcoin is just going parabolic and all the shit coins are going parabolic, who's going up faster? Bitcoin underperforms to the upside. It underperforms or overperforms to the downside, as in it loses less value. So again, the gold silver chart and the Bitcoin dominance chart have perfectly told us the directional moves in metals and in cryptos. And that gives us a huge edge over the rest of the market, because all of the rest of these people thought, oh, they're going to go parabolic. They're going to go to the moon. This is the big one. This is the breakout. Rocket ships. Bags are packed. And now look, the same people that were saying bags are packed at $70,000. Bags are packed. New all-time highs. See you at 100K. See you at $250,000. All those same people now are trying to explain why we just had a 50% dump. So you have zero credibility because you were buying the top like a moron. And then you have zero credibility because you didn't even expect the obvious dump that just took place. I mean, I don't understand. I don't understand why people still listen. If I listened to somebody and they were wrong all the time, I would either listen to them as a troll or I would not listen to them at all. And yet, here we are. XPD, Palladium, melting down. Lost to 200 exponential and simple, looks terrible. Bearish control zone, complete trash. XPT, again, complete rejection off 200 exponential and simple. Platinum, complete trash. We'll be putting in a new low very, very soon. ACB, new low, retesting the breakdown. Does not surprise me at all. So obviously we saw our earnings come in and it was a little bit of a surprise, let's say. So the estimate was that they were going to lose 18 cents. They actually lost $3.77 per share. So it was a surprise of negative $3.59 per share, which was only a miss by 1,964%. And then as far as revenue, they reported 40 million. Estimate was 41. They were off by 1.5 million, 3%. Not a huge deal, honestly. But obviously that was bullish, right? Because they only missed by 1,100%, right? Or 1,900%. So that's good. All of a sudden it's bullish. Maybe it was already priced in. Who knows? We're right back where we were before the breakdown. I would expect to stack this resistance and go lower. Tilray, same thing, broke down from there, pushed back up. We're back at the breakdown area. I would expect this to go lower. Once we take out the low, I expect a retest of the breakdown and then lower lows. So CCJ, again, our uranium stocks didn't quite get down to our targets. We have slightly lower targets, get a little pushback up, retesting resistance, retesting 200 exponential and simple. Still looks bearish to me. Next, we have URA. So URA obviously lost 200 exponential and simple, came down here, revisited the lows, getting a bounce back up. I do expect rejection and lower prices. We're still looking for that around like $14, $15. UEC, again, continuing to melt down. Did not put in a new low, but it did find support on our ascending support line here in green. So we see clear resistance at these points. We see clear support at these points. So again, we're at the bottom of the range now. We'll have to see, does this end up being a break and go much lower? Retesting 200 exponential and simple. Uranium stocks look like they're getting ready to flip into a bear market. UROY is next. So we hit our target perfectly, 382 to the downside, absolutely nailed it. And then we got a nice little bounce up on that. This has been overperforming to the downside, so I would expect it to underperform to the upside right here. I think we're probably going to top out somewhere around like that 318, somewhere around there. But overall, again, this is the worst performing uranium stock. And then we have, Hex was just on here from last time. So we'll take a look at Hex. So obviously I talked about Hex a couple times now for someone's request, and talked about the risk reward and everything. Played out perfectly. So we were talking about, no, I would not want to take a long on Hex. I would want to take a short. And then since then it has completely melted down, back down to support. This was the key area that we were expecting to hold as support. It held perfectly, got a rejection. So now the next thing to pay attention to is what happens next. Do we come back up and retest the 200 exponential and simple again? Or do we just see that continuation and meltdown? Because in my opinion, Hex is going down to somewhere around like 7 cents, a new low. Looks very, very likely on Hex. So I think we nailed it. We knocked everything out. Went a little out of order there, but I wanted to talk about crypto first. So see what's going on in the comments section. Sohail says, sorry for spam. Do you have a Discord or another forum where one can join? I have a paid Discord group, man. It's like a one-time contribution, and then you can join the group. It also gives you access to the indicators I use on stream. I have a bunch of free indicators down in the description that you can use, but if you want the updated version of any of these or any version of these, this is the TJD Master. This basically uses slopes and tells you if you're in a bullish trend, short term, long term, etc. And then use that for basically like your trade strategy. So if we just pull up, let's say like the Bitcoin chart, if you've never seen this before, this is the TJD Master. So all we're looking for on this, it's super simple. When we're in an uptrend, both these lines turn blue. And when we're in a downtrend, both these lines turn, red or pink. So if we just look back at this, you can see whenever we switch to an uptrend right here in the 2013 bull run, or 2015 bull run, it's $259 as a buy. And then the sell is when we flip both of them red right here. So you're out at 10,164. And then again, you buy back in when they flip blue again, and you're back in at 47.41, and then you're out again at 85.54. Then you're back in again right here at 8,000, and then it has you out technically not until on the spot chart, I think it's right here. So 48,000. So obviously it just keeps it simple. Works on every time frame too. If you want a shorter term time frame and look at it, you can use it on the 4-hour time frame. You don't want to be in it when it's here. You buy right here, you ride it up, you sell, you rebuy right here, you ride it up, you sell, you rebuy right here, sell. There's a little choppy right here, and then we have a sell and back out again here. So the idea is to just make sure we capture the big moves to the upside and make sure we dodge the dumps to the downside. And then obviously, not only do you get access to that indicator, you also get access to the Jewel Thief right here. So this is the new version of the Jewel Thief, the updated version, and you have the ability to like turn on and off like hard buys, hard sells. You have like a strategy where you can only have a hard sell show up if it's above the 80 line right here. So this one like wouldn't show up because it's not above the 80. And same thing with the buys. This buy you could turn off right here. So it would only show you the buys when you're coming out of the bearish control zone like this one. They tend to be more effective, but you can mess with all that stuff. And those are two of the perks that I give to group members. And then the everything else is free. I mean, the TJD Master is free. You can use, this is an awesome, or I'm sorry, the TDMACD is free. There's a ton of other awesome indicators. The old Jewel is free. It's just a way that I basically say thank you to the people that have decided to show their support. So, but anyway, that being said, after that little group tangent, it's been a while since I talked about the group. So, and then we do all kind of other stuff in there too. Obviously, when the markets are like this and everything's melting down, it's a little less active. I've noticed quite a few people have not even been like logging on lately. It's easier to just kind of look away when you're getting wrecked, which no one should be getting wrecked right now, because especially group members should all be positioned on the right side of the trade for this. But, it is what it is. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And that is a Discord group, by the way. And then Yoda says, hello, everybody. Hello, Crypto Trend Trader. Always love these sessions. A question, can this be a bigger correction move and a topping formation both in equities market and crypto? Yeah, of course, man. I mean, if you've been around for long enough to know that I'm extremely bearish on these markets right now. I mean, we're literally just now confirming bearish on like the stock market and cryptos. And when I say just now, some are just now, others have been bearish for a month. But I mean, just look at it as my opinion on the markets is the TJD master, because the idea of the TJD master, the indicator I just showed, is that is my trading strategy put into an indicator. So you could literally show it to your wife or your kid or probably, you know, an intelligent primate and just explain to them, hey, when everything is green and blue, it's bullish. When everything is red and pink, it's bearish. And then they could literally be like, oh, okay. And then you can pull up any asset you want and then look at it on any time frame you want and say, okay, it's bearish right now or it's bullish right now. So that's the whole idea. So as long as we're below the 200 exponential and simple moving average, we're bearish. So here's a perfect example. So looking at my chart setups right here, we can look at this very clearly. We can see gold is below the 200 exponential and simple. The 200 exponential is bearish because it's red. 200 simple is still blue. So this is like neutral bearish right now because we're below it. But we've been in an uptrend. Okay. Here we look at the TNX. We're well above the 200 exponential. We're well above the 200 simple. They're both blue. The 8 and 21 are both green, and we're well above them. That's obviously very bullish. Then we have the dollar. Dollar, all green, all blue, very bullish. And then we have crypto. So here's Bitcoin. So we're below the 200 exponential. We're below the 200 simple. They're both red and pink respectively. We're below the 8 and the 21. They're also red and pink. So again, very, very bearish. And then, you know, we can look at something like, let's switch to the stock market real quick and see where that's at. And that will further make my point. So here's our Dow Jones. So look, we were very bearish the whole entire time up. And then it flips over. We're below the 200 exponential and simple. They're both red and pink. And the 8 and 21 are across the downside. So we're very, very bearish. This is a bear trend. We have just started. This is the beginning of the bear market. Do we get a V-bottom bear market like this and it comes back up? Maybe. Okay, so what's the point of this strategy and why does it work so good? Why is this the perfect strategy and my strategy, you know, after, I mean, tens, hundreds of thousands of hours of trying to figure out what works the best and the easiest way to trade markets? Why do I use this strategy? Well, in order for a big dump to happen, we have to lose the 200 exponential and simple. So if we always consider this a bear signal, when we go below them, we never will suffer one of these massive capitulation dumps like this. And then what about to the upside? Well, if we always look for when the 200 exponential and simple flip blue and then the 8 and 21 are green, we enter into positions then, and then we capture massive moves to the upside like this when it's bullish. And then again, once we flip into a bear market, we at least leave our positions, we exit our positions to protect ourselves from downside. Is it possible we get something like this where it breaks down and then looks like it's going to go negative? Sure, but we don't ever sell this because the 200 exponential and simple didn't flip red. Here they flip red, we get out, and then immediately after we get out of our position, we see follow through of 33% to the downside. Here, you know, this flips blue, we get into this position, and then what happens after that? You know, we enter basically around this area here, and then again, when do we exit? We exit right here where 200 exponential and simple flip red. We're up 31% and we took no risk. I mean, I can't say no risk, but we avoided all the big losses and we captured all the big gains. And that's literally our whole strategy. That's my whole strategy. Avoid losses, capture big gains. And then little losses and little gains, who cares? They cancel each other out. But if we look at this chart right here, I went through and did this at one point in time and showed off, you know, if you were using the 200 exponential simple strategy with 821 crosses, you bought the 821 cross whenever we were above the 200 exponential and simple, you know, this is exactly what it leads to. You know, basically you buy at the 821 cross to the upside, you sell at the 821 cross to the downside. So you're in this position for 192 days, you make 443% and then you're out. And then you do the same thing. Now you're negative, either you're short or you're just out of that position. You do the exact same thing. So this goes down now, and then you would re-enter right here. So you dodge a 42% downside by taking profits. And then again, you buy back in right here, and then again, you have a nice push to the upside, nice push to the upside, then downside. But the main difference is with the 821 scalping strategy is once you're below the 200 exponential and simple and they have flipped over red, we're no longer looking to buy the 821 crosses to the upside. We're looking to sell the 821 crosses to the downside. So what we did was we sell the 821 cross to the downside below the 200 exponential and simple here. And then what ends up happening? Well, I mean, I don't have to tell you. It immediately goes down 42%. So that's all it is. It's just simple. It's a simple strategy that I've, spent a ton of time developing and then created, a beautiful indicator that tells you basically exactly what to do. And you can even go up here and turn off your actual price action. And when you look at this chart, it's so obvious what you're doing. 200 exponential and simple are still blue and going to the upside. It's great. And then right here, everything changes. The 821 are across the downside. We're below the 200 exponential and simple. That's bearish. Here, we try to push back up, try to save the trend right here. And then the 821 cross back to the downside. We're below the 200 exponential and simple. That's bearish. So you don't even need to look at the actual price action. Just the, you get used to seeing the indicator oscillators and it tells you exactly what to do and when to do it. And obviously that's why I provide that to the people that have shown me support because it makes all of this possible. So yeah, I would say I definitely think that there's a huge possibility for much lower price action. And if you pay attention to what we did, we dodged the Corona dump, the black swan event. We dodged that with this strategy. We bought at super low prices and rode the entire wave up. We dodged the 2018 bear market in Bitcoin with this strategy, and we captured the entire move to the upside. I mean, it works absolutely beautifully. It's super simple. But, obviously people want to try to find a million different indicators and this, that, and the other, and they just overcomplicate everything. The TJD Master is the simplest way to do any trading, in my opinion. The number one first thing you should be paying attention to is moving averages. After that, you're looking for, Fibonacci retracements, extensions, etc. But the most important thing is trade with the trend. Because if you're trading with the trend, you have probably, let's say a 66% chance you're right. If you're trading with the trend, a 33% chance you're wrong. And I use this analogy all the time, but imagine you're swimming in a river with a strong current. Okay? You can swim with the current indefinitely because it just propels you. You can stop swimming, it'll still push you in that direction. That's trading with the trend. But swimming against the current, sure, you can do it for a while. You can make money trading against the trend, but eventually the trend wins out, because the trend is pushing you in that direction. So you can swim as hard as you want upstream and you can make some progress, but eventually you get tired and then the stream takes over again. And that's what trading with the trend is all about. And you guys know my pinnacles for trading are mastering like 4 basic principles. Trade with the trend so you increase your probability of success. Trade probable risk-reward ratios. That way, every time you're right, you make more than every time you're wrong. So if you're right 50% of the time and only take 2-to-1 risk-reward ratio trades, you can be right. Say you flip a coin 100 times and every time you're right, you get $2. Every time you're wrong, you lose $1. Well, probability says that you're going to get 50 heads and 50 tails. So if you take heads every time, at the end of 100 flips, you have lost $50. But you have gained $100. So when you net out the 50 you lost against the 100 you gained, you still are up $50. So that's why risk-reward ratio is so important. That's why probability of success or trading with the trend is so important. And then you need to master other important things like, you need to have your actual strategy laid out clearly and concisely so you know when to take entries, and how to actually like create your risk-reward ratio, etc. But the fact of the matter is it's all about position sizing after that. Because if you basically take, and that's our third pinnacle, position sizing, if you have $100 and you bet the $100 on something with a 10-to-1 risk-reward ratio and 75% probability of success, if you're right, sure, you're going to kill it. But if you're wrong, you're wiped out. So if you use correct position sizing to make sure you don't get wiped out, say you want to take 10 total trades, and each of those trades you trade with 10% of your account, and then each of those trades you have a 10% stop loss on. So let's look at one of those trades now. So we took $100, we cut it into 10 pieces, and then we took 10 trades. So each trade is $10. And then we have a 10% stop loss. So if we're wrong on each of those trades, the 10% of our account that we risk, we lose 10% of that, which is only 1%. So now instead of risking 10%, if you just make one trade with your whole account and you have a 10% stop loss, you're risking 1% because you're only trading with 10% of your account with a 10% stop loss. And then it gives you 9 other trades you can enter into to give you a better probability of being right on at least half of those trades. Therefore, you don't lose money. And then after that, I mean, honestly, the fourth is the easiest one or the hardest one, depending on how you look at it. But the fourth part of the strategy, you know, risk reward ratio, probability of success, position sizing, and then an actual like trading plan or trade journal or strategy, and then sticking to it. You have to actually stick to it. You have to trust it. You backtest it as much as you want, but if when it tells you to sell, you don't believe it, who cares if it's right 99% of the time? Because you don't believe it. You don't trust it. You don't have confidence in it. So the confidence game is the next most important. And the way you gain that confidence and a good trading strategy is by being consistent and always following it and trusting it. And the way you gain trust is by backtesting it and then using it with small position sizes at first. And then after a while, you will indiscriminately trust this. It won't always be right, but at least you won't doubt yourself. You won't doubt your system. You won't doubt your strategy. And that's very, very important in the end, because confidence is what this is all about in the end. Because if you get a perfect signal and you don't take it, you're going to hate yourself because you didn't take that signal and you would have been right. And then you're going to be rushing to take the next signal because you're trying to make up for the trade you just missed out on. And that's probably going to be an unreliable signal. And then you're going to take a loss. And then you're going to be mad. And now you're like, I missed out on the gains and I took a loss. So now I'm going all in on this next one. You're going to do like dumb and reckless stuff. So the confidence is very important too. But also, you know, just sticking to your strategy. So that was it for Yoda. So Cool Sheet says, what's the best positioning for this coming recession? Cash and what? I mean, there's a lot of different ways things could go, man. And, you know, like I said, this is like uncharted territory right now. We haven't seen a financial situation like this since the 1980s. And even then, it doesn't line up the same. But we talk about the defensive sectors. In my opinion, diversification is the best. But the defensive sectors that people tend to run to in recession are the ones that we always show. And that's why I always show them. So we have first the XLV, which is healthcare, you know, because people always are going to need healthcare no matter what's going on in the environment. Then utilities, people always going to have utilities. Obviously, no matter what's going on, that's what they have to pay for. And then XLP, consumer staples, you know, it's the stuff that people need to buy, that consumers need to buy, as opposed to consumer discretionary. And then finally, we have real estate, typically holds up better, and also typically provides income. And then the final one is dividend stocks. A lot of times in recession or like economic uncertainty, people will just go to dividends and just look for that like constant income. But obviously the way I look at cash is I look at cash as a options position on whatever asset I want to buy. So if I'm in cash, sure, Bitcoin went up 20% today and I missed out on it if I'm just in cash. But also Bitcoin just went down 40%. So I have the option to buy down 40% with my cash. So my option just made me 40% more of that asset. Because if I was going to invest $100 at Bitcoin at, let's say, $50,000 price tag, and then all of a sudden Bitcoin goes from 50 to 30, that same $100 gets me substantially more Bitcoin than it did before. So that cash position is really an option on whatever I want to buy, because I don't have to be locked into Bitcoin. It's not like I'm just shorting Bitcoin, you know, but essentially having cash is shorting everything. Because you have, what are your options with cash? You can either buy something with it or you can hold the cash. And everybody's like, yeah, but don't want to hold cash because 8% inflation and it's killing your money. Sure, okay. Point to me one asset that we're not involved in, that we're not long on, that has gone down less than 8% in the last year. So, and that's arguing, you know, yearly inflation is 8%, which it's not. It's probably going to average out to like 4% or something like that, or 5%. So if you can point to me anywhere an asset that we're not invested in that didn't go down by more than 8%, then it was a bad idea to hold cash compared to that one asset. But when we look at every single chart for every crypto, every stock, almost every sector, with the exception basically of, I mean, energy, almost with the exception of energy, and they're down substantially more than 8% in substantially shorter amount of time. I mean, the bond market down 35%, crypto down 50 to 99%, stock market down 15 to 90%. I mean, so the cash play was the best play. I already won. We won. If you held any cash over the last, few months, all this year pretty much, any cash you hold in 2022 is worth probably 25 to 50% more now because everything else is down substantially. And then when I look at the DXY, that tells me, do I want to be holding US American cash, or do I want to be investing in US American equities, assets, etc.? Or do I want to be investing in foreign assets or equities? And it's different for other people in different countries. Like if I lived in another country and my pay or earnings or whatever, however you're making your money, is denominated in a different currency, let's say for instance the euro, when I look at the DXY chart and it tells me the DXY is strengthening compared to that basket of currencies, or you could look at just, dollar euro. If the dollar is strong, that tells me I don't want to be holding my savings in euros. I want to be holding them in dollars. And same way with investing. So that tells me, do I want to be diversifying into emerging markets? Let's look at the DXY. DXY is strengthening. It's going parabolic. No, I want to be owning only US assets. And then I look at the US assets and I say, are these in a bull market or a bear market? And I say, okay, all of the major indexes are in a bear market. Crypto's in a bear market. Gold is almost in a bear market. So now do I want to be holding, I already know I want to be investing or holding US equities or cash because the DXY is so strong. Now I want to determine, do I want to be holding actual just dollars, or do I want to be holding the equities that are denominated in dollars? And then is when I decide, okay, I want to be holding dollars because all the equities look bearish. So that's what it's all about. The DXY is the same thing as the Bitcoin dominance chart or the gold silver ratio chart. The Bitcoin, all three of those charts are telling us the same thing. They're telling us, do we want to be invested in X or Y? Do I want to be invested in gold or silver? Do I want to be invested in Bitcoin or altcoins? Do I want to be invested in dollars or other? And then after that, we can use the correlation or, the relationship between those different things to tell us what's the best thing to be in. So right now, we know we don't want to be in equities because they're all going down, with the exception of some of the winners like energy that obviously we are involved in. But as a broad sense, let's just look at like the Dow Jones. The Dow Jones is in a bear market, so we don't want to be involved in that. And then we look at the DXY and we say the DXY is strong, so we do want to be in US denominated assets, but we don't want to be in stocks. So what do we want to be in? We'll probably just cash then, or probably just energy, something like that. So that's how I use the relationship between all those. And it's the same thing with the Bitcoin dominance chart for gold and silver. When Bitcoin dominance is going up, it means that crypto is probably going down because Bitcoin gains dominance when crypto is going down. It loses dominance when crypto is going up. Because when they're, say going into this bull run, how many cryptos are there? Let's say there's 1,000 cryptos. And then at the end of the bull run, there's 2,000 cryptos. And the market cap is substantially higher, but Bitcoin has a smaller percentage of that market cap. So that was a bunch of people speculating on trash investments, like garbage cryptos that are going to zero. So then when we see the market roll over and everything starts selling off, we expect Bitcoin to hold strength better, therefore gain dominance. And then we expect all these trash, garbage, altcoin, scam pieces of shit to go to zero, therefore helping Bitcoin gain dominance, or they are losing dominance. And it's the same thing with gold silver ratio. When gold strengthens compared to silver, it usually means gold and silver are both going down. Silver is just going down faster. When silver strengthens in relation to gold, it means that we're going up and silver is going up faster than gold. Now, there are anomalies where this is different for a short term, but overall, this is what we're sticking with. And obviously, it has worked out perfectly because it has literally predicted all these moves in the market. Hang on. Let me scroll back up here. I appreciate you guys being active in the chat. What's the best positioning? So we just got that one. Yoda says, the times we have had an inverted yield curve, we have many times had a topping formation before a recession. Yeah, Yoda, I thought you were in this group for a lot longer than maybe you were. Let's look at this really quick and we'll discuss that. I don't have my other chart brought up here right now, but let's just look at this. Okay, so this isn't going to tell us what the yield curve is doing, but this is going to tell us the 10-year treasury alone. Okay, so, and the yield curve inversion tends to happen around the same spot at this resistance. So when we look at the yield curve inversion chart, you know what I can do? I can probably just add on, I could probably just use the compare. So this is our 10-year treasury, obviously. And then the 2-year treasury, oh man, should I just bring that chart up really quick? Hang on one second. I'll just bring the chart up because we're doing pretty good on time. What do we got? Hour 35? Yeah, hang on. Let me just pull up the 2 and 10 chart. Give me just a sec. And then we want to compare that to our 10-year. All right. As a matter of fact, I can just show you guys how I draw this chart also if you want. Okay, so here is, so all I did was I pulled up the US 02Y, which is the 2-year yield, and then click on compare. And then when you click compare, you're going to type in US 10 year, US 10Y. And then that's going to give you the 2 versus the 10. And then it's going to give it to you in percentage right here. We're going to turn it back to log scale. So we want on log scale auto, okay? And then after that, all we're going to do is, I'm just going to switch to the weekly chart. And then, you know what? I'm actually going to modify this. So instead of seeing the price action on here, we're going to click on the 2-year yield. And then instead of candles up here, we're going to scroll down and we're just going to pick area, okay? So now this area right here is going to represent our 2-year treasury yield right there. And then this area here is the orange here is the 10-year treasury yield. And then we can actually switch that over from line to area as well. And then we're going to change the color on that back to orange. And then we're going to change the background color to orange as well. It's not like that big of a deal, but that gives us like a little clearer of a picture. And now this is my 10-year chart right here. So when we look at this right here, what is this telling us? Okay, it's telling us a couple things. So obviously the 2-year goes lower and then moves back to the upside every one of these dips. Okay, and then the 10-year dips some, but doesn't go nearly as low, obviously. So the yield curve inversion happens when our blue area tightens up and closes the gap with the orange area. That means the 2-year is crossing above the 10-year. And then each one of these big white lines right here, that is a recession that took place. We have one in 1990, one in 2001, one in 2007, one in 2019. And we know that each time that happened, what happened first? Well, we have this resistance, this descending resistance line that goes back like 40 years, basically, to 1980s. So this was our top every time, as yields have been progressively lower and lower. As the lower the cost of money is, the more money people borrow and then speculate or create businesses or whatever. So this last 40-year period, since the last time we saw inflation with Paul Volcker when he raised rates to like 20%, this entire period has been fueled by lower and lower rates, cheaper and cheaper money. The cheaper money is, the more people will use it. The more people use it, the more money gets created through issuance of debt by like banks. But each time we get to this resistance line, it fails, and then we roll back over and go lower. So we have obviously some clear resistances, and when we nail that resistance and then we get rejected and go lower, that's where the cross happens between the 2 and the 10 back to the downside. So here we had for a couple days, or a day or whatever, if we zoom in really, really close right here, we see there was actually an inversion that took place right here. The 2 actually was above the 10 just for a heartbeat. And then the 10 came back above again. And now the 2 is below it again. But what's starting to happen now is they're both starting to roll over. So if they roll over here and lose this resistance as support and then cross back to the downside, right before the recession happens, the cross happens. So here we see the 8 and 21 cross to the downside. That is the beginning, basically, like, it's literally right before the recession happens. And then we go back here and look at the next one. And again, this is another reason why the TJD Master is so amazing. Again, we see the cross happen right here, and that's right before the recession happens. And then again, we see the cross happen right here, and that's right before the recession happens, etc. So the actual 2 10-year curve inversion, that can happen like 2 years before the actual recession occurs. So it's useful. It tells us economic environment is not sustainable, but it doesn't tell us when it's going to happen. So the likelihood of recession for us is very, very high sometime in the near future. We don't know when, we don't know how long it's going to take, but we do know before the recession happens, every single time, we know that the 8 and 21 cross to the downside. So what we're looking for now is yield curve inversion, which already took place at least once, and then we're looking for the 821 cross to the downside. So that's telling us basically a much better, useful way of telling when the recession is going to happen. Now, what we need to pay attention to on this chart, and why it's so important right now, though, is every other time this acted as resistance, and then we rolled over and went lower, and every time we have a lower high, a lower low, and then we have a lower high and a lower low, and then we have a lower high and a lower low, and then we have a lower high and a lower low. But now what we're paying attention to is, 1, we already almost hit 0. So can we go lower? Can we go lower than 0.1%? I mean, not really. We can go to 0. That's pretty much it. So we're already pretty much the lowest we can go. And then next, what we're paying attention to is where this peaks out right here. This is our previous high from the last cycle, which was 2018, right before the Rona dump. And that was at like I can't see it because of the way this is. It's like 3.25. Okay. And that was for the 10-year. And then for the 2-year, it's basically at 2.92%. So what we're paying attention to, why this is so important now, is if this happens to go higher than this previous high right here, we've already had a technical breakout of the resistance line. Now you could argue this should be drawn differently and that we didn't technically break out. So if we do this, we have like a little nub above here, a little nub above here. We're perfectly at it. And then here we've broken out. It's hard not to argue that we haven't already broken out of this downtrend. But the most important thing is not to push above it, but it's what happens next. Do we take out the previous high? Because if we take out this previous high, something just changed on this chart. On a 40-year chart, something changed. Because we went from a high, then a low, then a lower high, then a lower low, then a lower high, then a lower low, then a lower high to a lower low, then a higher high. So if this takes out the previous high right here, and it breaks out of a descending resistance line, that's what happens right before an asset goes parabolic, which in this case, the asset is the treasury yields. So this would tell us treasuries are going to get absolutely wrecked if this breakout confirmation new high occurs, and it tells us yields are going to go much higher, which we're also fighting inflation for the first time since back here in the 80s. So this is something that's happening the first time in 40 years, and it's corresponding with an event that happened 40 years ago that required us to raise rates to a new level as well. So it's basically telling us, hey, something's different here. Something's changing. It's worth paying attention to. You know, we may be topping out right here before we break out, and we may not be. But the fact of the matter is, when we look back at this, when we look back at this TNX chart just by itself, and this is the 10-year treasury all by its lonesome, we can see the same thing taking place. We've been below the 200 exponential and simple going back. You know, this has been in a downtrend. Yields have been in a bear market, or bonds have been in a bull market since, you know, arguably the 80s, early 90s. And now for the first time, we have not broken above the 200 exponential or even tagged the 200 simple the whole way. We didn't even get to the 200 simple here. We definitely didn't close above the 200 exponential. This is on a monthly chart. Here, the monthly has closed already above the 200 exponential and simple. 200 exponential has a positive slope. 200 simple is almost flat. We're up above it. So while we're seeing a temporary potential rejection at those levels, that's probably just people taking profits. Doesn't necessarily mean all of a sudden we're just going to go back down below it and get rejected and go lower. At this point in time, there's a strong possibility. I mean, and factually, as long as we're above 2.67%, this is going to turn into a bull market very soon. So if we have a 40-year bear market and we're about to go into a potential bull market, it's worth paying attention to. We're in the bullish control zone. We have blue slope line on the TJD TDMACD. We're above the 200 exponential and simple. The slope is to the upside. And we're threatening, not only have we broken out of the descending resistance, aka the 200 exponential and simple moving average, which we can turn on the resistance here, and we can see this channel, this green channel, it touches perfectly every time on the top of the green channel, touches perfectly every time on the bottom of the green channel. And then here we see this is the top of the green channel at 2.339%. We have a massive green candle after the top of that channel. And then we have another candle that started to push up higher. So we're seeing now a breakout in this. And this is telling us that all the recessions we've had in the past are nothing compared to what we're potentially looking to experience if this breaks out to the upside. Because what are the worst recessions we had? What are the worst events we've seen in economic history of late? Well, 2007, right? 2008, you know, global financial crisis, housing crisis. This was the top, okay? And we sold off pretty aggressively and continued the bear trend. And then here we have, go back to 2000. That was another one. You know, Y2K, the big millennial .com bubble burst. Well, this was the top right here. That was the .com bubble burst. And then what happened after that? Completely melted down. So what's happening now is the opposite. Stocks are melting down, but the treasury yield is exploding to the upside. It's going parabolic. So what is that telling us? It's telling us we're potentially looking at a different scenario. The last two big scenarios we had that were bearish for the markets was 2000 and 2008. This scenario is potentially going to be bigger, and it's going to be exponentially worse. And this is corresponding opposite. When the yield stopped out previously was 2000. When yield stopped out here was 2008. So now we're talking about, let's just say yield stop out right here. Well, then we're looking at a meltdown similar or worse than 2000 or 2008 in the markets. Or this was our Rona meltdown. So we're looking at a pretty bad meltdown. But right now what's happening is we're not necessarily about to melt down. We're actually breaking out to the upside. So if this breaks down and we get a meltdown, what is it going to look like if this breaks up? Well, if it melts down because the interest rates got too high and they had to start lowering them here, and then they start raising them here, imagine that effect. Man, it's so hard to put this, but when the rates were going up here, it was causing issues in the economy. So the economy started topping out. They had to lower rates because the economy was showing potential recession or bearishness. So they lower rates, and then the stock market actually starts to perform well again, but it tops out around this area. 2008, same thing again. Now here we're looking at the opposite scenario. We're looking at stock markets and everything are topping out. Crypto markets are topping out, but we're not getting rejected. We're not lowering rates here. We're potentially going to continue raising rates to crush this inflation. So if we're going to raise rates to crush inflation, we're looking at a scenario more like this. Back in the late 70s, early 80s, where the treasury yield would potentially be going parabolic on this, which is going to absolutely destroy asset prices. Because we know, obviously, what happens when the price of money goes up. So this is I mean, I can't even say once in a lifetime because, you know, if you were alive in the late 70s, early 80s, you actually already experienced this. But this is a 40-year cycle potentially playing out. And then that's why it's so important to look at the DXY also, just to kind of transition into that. The DXY is telling us something very, very important also. that people just don't seem to realize. Okay, the DXY has been, again, this is 1985 right here. This was the peak. So we have a high, then we have a low here in 92, then we have another high in 2001, then we have another low here in 2008. And again, it's important to pay attention to this. This was 2001. The DXY was at the highs, and that, 2000, 2001, and that was a meltdown in the economy because of, dot-com bubble burst. And that melted down stocks and melted down the DXY also. This was 2008. This was the global financial crisis, okay? So this was a worldwide event. Tech stocks blowing up was a United States event, and some people invested in the United States, so suffered in other places. 2008 was the global financial crisis, or the housing crisis in the United States. And what happened that time? The opposite. Here, this peak in 2000 is the peak of the DXY. This peak or trough in 2008 is the bottom of the DXY. Since 2008, the DXY has been strengthening. We have a macro low, then we have a higher 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 low, and then along the way, we have a high. So if we look at this, a low, then a high, then a higher low, then a higher high, then a higher low, and now we have a higher high. So this is an uptrend taking place. Also, this entire period, since we literally broke down into the bear market of the DXY in 1986, we've been below the 200 exponential and simple at all times, or we've never had them blue at the same time. 200 exponential flipped blue right here in 2000, for this little run up, and then melted back down, never flipped to 200 simple blue. Here we see the 200 exponential and simple are both blue now, and we're above them, and they're sloped to the upside. So that tells us we're entering the beginning of a bull market in the DXY. So we just confirmed a bull market in the DXY in 2019, and all these retarded retards that call themselves analysts are sitting here telling us the dollar's going to melt down, it's going to go to zero, it's trash. Are you sure? Because the chart, the monthly DXY chart, says the dollar is the strongest it's ever been. Not monetarily, it's only at 104. Here it was obviously at 120, but momentum is picking up. We're in the bullish control zone. We skyrocketed out of the bearish control zone, and we rode this trend the whole entire way. We have all green histograms above the zero line, blue slope line. Everything is bullish. This is literally the most bullish the dollar has ever been, if not at least since 2002, but realistically since the 1980s. So again, we're seeing a 40-year trend come to an end. And don't pay attention to the billion lines on this chart. It's not for you, it's for me. But the most important thing we're paying attention to right this second is we see basically, that series of lower highs and lower lows. We have a peak high right here. We have a peak high right here. And then we broke out of the peak high right here in 2015. We came back down and we retested it at the bottom in 2018. So we broke out of a descending pattern. We retested it. It held as support. And then we continued to the upside to put in higher lows and higher highs. So the dollar actually right now, the DXY is macro strengthening, accelerating to the upside. And our next target to the upside, depending on how we do this, but if we take our bottom right here and we draw a channel, which is this yellow one, I'll make it a little bigger so you can see better. And we draw it basically off of the lows, depending on how you want to draw it. I have it drawn a couple different ways on different time frames, but there's a little wick that comes down right here, and then there's some action right here. So we have a couple touch points on the bottom, and then this obviously does not encompass the blow off top here from the 80s, but we have a top right here, and then we'd be looking at potentially a top at about 110, which obviously now we're at 104, so it's not that far off, but that was my target to the upside on the macro from a long, long time ago. And then I actually expect it to potentially come back down lower again. But this is telling us that the dollar is extremely bullish right now. Extremely, extremely bullish. It's going absolutely parabolic right now on a monthly chart and showing us something we haven't seen in 40 years. And that corresponds to something else that we haven't seen in 40 years from the bond market. And that's telling us that all of a sudden, anytime someone compares anything that's happening now to something that happened anytime in the last 40 years, they're wrong because it's different. Because the main thing that's changed in the last 40 years that has never come up since the 80s before was inflation. We have never had sustained rising inflation since the 1970s, 1980s. And that was when all these things peaked out, and they've been in a downtrend ever since. So if now all of a sudden we're seeing inflation again, we're seeing the dollar DXY breaking out to the upside, we're seeing treasury yields breaking out to the upside, what does that tell us? It tells us there's a high likelihood we're going into a similar situation as we saw in the late 70s, early 80s, and that we should position ourselves accordingly. Well, what happened then? A complete meltdown. So, I mean, all we're doing is just following all the clues that the market's laying out for us. And then we're just respecting the market for those clues. We're not just saying, oh, the market's stupid. The Fed's got our backs. So anyway, that was kind of a deep dive, but I'm assuming you probably have not seen me do that previously. Hopefully that helps with your understanding of that. So times we've had an inverted yield curve, how many times had a topping formation before a recession? So yes, I do think we're going into recession. We already had 1 quarter of declining GDP, which is 50% of a recession. The definition of a recession is 2 consecutive quarters of declining GDP. So we're already 50% of the way there. Yoda says, can we perhaps take a look at Polkadot? Yeah, I could look at Dot. Probably going to get out of here pretty soon, though, once I finish running through these questions. So Polkadot. It's been a while since I looked at this. Oh my gosh. Man, that's atrocious. All right, so here's Polkadot on the daily. Okay, it's been a long time since I pulled this chart up here, but obviously we had an ascending channel that we were inside of the entire time. We broke down from the channel. That was when we got extremely bearish on Polkadot. That was at $47. I sold the majority of my Polkadot between $46 and $50 up here at the top. We then broke down and started to form what I identified as a basically a slanted head and shoulders stopping pattern. Which obviously has played out now. So we broke down from the head and shoulders stopping pattern. Obviously, like I said, I have not charted this in a long time. So this is some pretty old stuff. But once we broke down from the head and shoulders pattern, we would expect the measure move to take us down to roughly $9.60. Obviously, in the last couple of days, we hit that target. So it's played out perfectly. Absolutely beautiful. We did actually take out the macro low right here. So again, you know, we have a low, then we have a high, then we have a lower low. This looks very, very bearish. It's very clearly under the 200 exponential and simple. Got rejected off of the 200 exponential and simple. Looks like it's going to completely melt down. Is there a better exchange with more history on Polkadot that we could use? Or does it even matter? I mean, at this point in time, I would say at this point in time, what I would be paying attention to is from the bottom of July right here to the top, the macro high in November. And then if you put your fib in place from the low to the high, it will give us Fibonacci extension targets to the downside. And then we can extend those extension targets over to the right. And we'll notice that, oh, perfect. So we'll notice that the actual, it's hard to see, but the wick came down exactly and touched the 1.236. So again, had we been charting this, we would have known that was the exact target to downside was 1.236. Does that have to be the macro bottom now? No, this thing probably goes to zero. Maybe not zero, but you know what I'm saying. Next target to downside, 1.382 at $5.52. Then the 1.5 at $4.51. Then 1.618 is our macro target to downside, $3.70. So, you know, maybe I'll be wrong and Polkadot is just amazing and it's great. I've traded this thing and made a lot off of it, massive percentages. Doesn't mean I hate it, but it is reality that realistically, if this happens, if this scenario plays out, I mean, we are talking about some serious downside. How can we even do this? Maybe if I look at the monthly. I mean, we like can't even freaking see to the downside. This thing has gone so parabolic and melted down. I don't even know what that would amount to. I mean, if we go from like percentage wise, the losses will be, I mean, it's going to be at like 99%. It's at, you know, where it went to right now from the top to the bottom, that's 87%. So you're basically looking at, you know, another just complete destruction. So Polkadot right now, it looks like trash, like all the rest of the crypto does. It looks like absolute trash. I mean, it's at $10. It's terrible. And keep in mind, this was one of the ones I actually liked. No offense to all the other cryptos that are trash that I don't like, but, you know, it is what it is. All right, so let's get through these last couple questions, then we're gonna call it. Take a look at Polkadot. Trader Billy, what's up, brother? Good to see you. Yoda says, thank you for your explanation, Crypto Trend Trader. Pay for insurance, as you say. Wait for confirmation. How does one join your Discord? Email in the description below. Yeah, you can just email me, man. It's a one-time contribution. You get access to the indicators and the group as well. Soheil says, where can I sign up, sir? Yeah, just message me, guys. You can get my email. It's cryptotrendtrader@gmail.com, or you can find it in the description or the channel page. But that's it. I just told you. Yoda says, next, the times we have had an inverted yield curve, we have many times had a topping formation before recession. This you have already answered, Crypto Trender. Thank you. There went any room to send in one message. There want any room to send it. Cool. Wasn't. I got you. So Ephraim says, hey, good stuff. Enjoy your perspective. Thank you, brother. I mean, it helps that I have a pretty good track record. What's up, Mr. Lex? Good to see you, man. It's been a while. Going well down here. Hopefully you are doing well as well. Doing well as well. UniQ says, bit late, but happy to catch a bit live. Yeah, there was an issue in the beginning of the stream, too. It was like only showing up as private. So you should be able to go back and watch the quick little Bitcoin and Luna talk that I did in the beginning. Big D says, what's up, y'all? Hey, what's your opinion on having some money in stable coins like USDT, USDC, and BUSD? Dude, I can't even tell if you're being serious right now or if that's sarcastic. I mean, obviously, I shouldn't even have to answer this question, but I'm going to answer it just in case you're serious. Let's take a look at UST. Obviously, you're talking about Tether, USDT. But this is Terra, which is supposed to be a stable coin. So this was the Terra chart previously. Oh, that's pretty good, right? It's staying right around $1 as it's supposed to. Maybe goes off by a little 0.1% here or there. Well, in the last week, this stable coin, this $1 quote unquote pegged stable coin, went from $1 to 17 cents. So you just lost 82.5% of your stablecoin value. So if you decide you want to keep all your money in stablecoins while the bear market takes place to protect you from downside potential, well, you just lost 83% of your money because you bought this trash bag stablecoin. Could this have just as easily been Tether blowing up? Sure. Could it have just as easily been any other stablecoin blowing up? Sure. They're all trash. They're all garbage. Why would you hold a stablecoin? Why don't you just hold dollars? It doesn't help you with taxes. It doesn't help you in any way. I mean, unless it does maybe in your country, it's not tax advice. Maybe there's something in your country where if you trade from a crypto into another crypto, you don't have to pay taxes. In the United States, it doesn't matter. You have to pay capital gains taxes no matter what. So if you trade from Bitcoin into a stable coin, you have to pay taxes. If you trade Bitcoin into $1, you have to pay taxes. So nothing changes. So why do you want to take unnecessary risk? Think about all the people that were staking in Terra to gain their little 10% or 15% or 20% staking rewards, or basically giving their money as a loan. Someone else is borrowing that money to speculate with. So you basically have, let's say you have $100,000 in a loan or stake or whatever, and you're going to make 20% at the end of the year. So you're going to make $20,000. Okay. So in the meantime, while you are waiting to get your $20,000, your $100,000 investment is now worth $17,500. And then at the end of the year, you won't, but let's just say you got $20,000. You're now at $37,000. So you put $100,000 in, you lost 60% of your money to try to gain 20% of your money. I mean, think about how little that makes sense. And arguably, it'd be more than that because you're not going to get 20% of your initial investment. I mean, you would, but it's not going to be worth anything. So no, I think stablecoins are trash. They're absolutely garbage. There's no reason to put money in stablecoins. Anytime someone is paying you a yield of 10, 20, whatever percent, it's because you're taking risk. So if you were getting paid 20% to stake a stablecoin, it's because there's a huge risk that you lose all your money. That's why you're getting 20%. And you know if someone is borrowing it, they're borrowing it to speculate with. And then again, this brings us back to our Luna point right here. When we started the stream today, Luna was at, what was it? 0.0007. So just since we started the stream today, Luna went down another 66%. And each of these days, if you look at it, this is a daily chart. So each of these candles represents, daily price action. Well, let's look at what Luna is at for today. It's down 97.7% for today. So if you put $100 in at the beginning of the day today, after it was down 99%, you just lost 99% again. And if you did it the day before that, and you put in, we can use the tool to just look at it. So if you put in 3 days ago, $100 into Luna, you lost 94% by the end of the day. Congratulations. Okay. And then if you just said, well, I'll just double down on my loss, and then you put in another $100 right here, and then it goes down again, by the end of the day, you're down 99.17% from that one. So you lost 96% the first day, so you had $4 left. Now you have $104. That's down 99%. So now you have like $1.04. Okay. And then again, today you said, well, it can't go any lower now. This has got to be it. So I'll just put in again. And now we're down another 98% today. So it can go down 99% every single day indefinitely, because you go down 99% and then you still have that 1% left. And then that 1% goes down 99% and you still have that 1%. So it can go down indefinitely 99%. It's going to get delisted. I mean, this thing is junk. I can't even stress how dangerous this is. This thing was literally April 5th. It was trading at $119. And now it's at 0.0002 pennies. So 0.01 would be a penny. So it's a tenth of a penny. So it's 2/100ths of a penny right now. I mean, no, I don't want stable coins, and I don't want trash cryptos right now. None of them. And when I say trash cryptos, I mean pretty much anything but Bitcoin. There's no reason to be holding any of these trash, super dangerous cryptos. Because I'm going to tell you right now, this is only just the beginning. If we saw one stablecoin blow up, we saw one crypto go to zero, there's going to be 100 more, 1,000 more right down the line, just waiting. So yeah, definitely no. 100% definitive no. If you're that desperate for yield, you need to look in other places, because to compromise your position in order to try to make some yield is the dumbest thing ever. It's so dumb. It's the worst possible thing you can do. It's cool to have, say, like, oh, I'm making 20% staking, but are you though? Like, did you make 20% staking, or did you just lose 99% or 80 whatever percent? If it sounds too good to be true, it probably is. If there was a bank that said, hey, deposit your money with us and we'll give you 20% interest, would you be a little sketched out? Or would you think, oh, that's normal. Every other bank is paying 0.5% and this bank is paying 20%. It's just a better bank. No, I would literally say, okay, this is obviously extremely risky. This place probably won't exist in a week, a month, a year, which obviously is the case for crypto. Ephraim says, I used to be a Bitcoin maxi too, but you're not understanding that UST was an algorithmic stablecoin, which is different than collateralized stablecoins such as USDT or US. Okay, see, Ephraim, here's the thing, dude, is you're saying things like, I used to be a Bitcoin maxi too, implying that I'm a Bitcoin maxi. I'm not a Bitcoin maxi at all. I'm not a Bitcoin maxi in any way, shape, or form. That's not the case. Right now, the way the market looks, and knowing that if you're going to hold crypto, Bitcoin dominance is strengthening, I'm saying you want to hold Bitcoin as opposed to altcoins because of the Bitcoin dominance chart. I'm not a Bitcoin maxi, dude. As a matter of fact, I'm 100% sure in the future, I would literally bet everything that eventually another crypto will come along, it will dethrone Bitcoin, and it will be the best crypto. And it's not going to be Bitcoin. So I'm not a Bitcoin maxi. But also, if you just buy the 2,000 or 20,000 trash cryptos that exist right now, 99% of those go to zero. So if that makes me a Bitcoin maxi that I don't want to just put my investments to zero, then I guess it's true. And then the second half of your question is, and again, you're saying, but you are not understanding, as if you think that I don't understand how this works, but that's not the case. UST was an algorithmic stablecoin. I know that. I know it was an algorithmic stablecoin. And there's other stablecoins that are also algorithmic stablecoins. But just because an algorithmic stablecoin just blew up doesn't mean that no other stablecoins are going to blow up. I mean, Tether has already been close to blowing up multiple times. Tether has already been investigated and gotten into trouble multiple times. Tether has literally changed the disclosure on their website from saying 100% backed by USD to 100% backed by stuff, including possibly maybe a little bit of USD. So if you think for 1 minute, just because an algorithmic stablecoin blew up and that the corresponding crypto project that had to do with it blew up, that no other stablecoins are going to blow up because they're not algorithmic, you're wrong, dude. You're 100% wrong. Understand that all we saw was just one thing go wrong in an algorithmic stablecoin. It does not mean only algorithmic stablecoins are dangerous. It means there obviously is a risk that was already presented and ignored, but it does not mean that the other stablecoins are safe. It does not mean that whatsoever, man. I wish people would understand this stuff. They always try to draw everything like black and white. It doesn't work like that. How many cryptos have gone to zero? Plenty of them. How many of them were scams? Probably most of them. But just because a crypto goes to zero doesn't mean it's a scam. It could also be a failed project. Just because a stablecoin blows up doesn't mean it's because it was an algorithmic stablecoin. It means it was a failed project. So it's very possible that we see other stablecoins blow up for different reasons, like lack of collateral, bank run, investigation by someone important, rug pull. There's tons of other scenarios. So again, it's not that I don't understand, dude. It's that you don't understand. You're not looking with a broad enough brush at what's taking place in the markets. And you're trying to make it something simple, like you're a Bitcoin maxi and you don't understand the difference between an algorithmic stablecoin and the rest. That's two assumptions that are completely wrong. So if your next assumption is that stablecoins are safe, I would say that's three assumptions that are completely wrong. So just be careful assuming, man. Big D says USDC is government regulated. Sure. So was Bernie Madoff. He was government regulated as well. What happened to Bernie Madoff and his Ponzi scheme? I mean, regulation doesn't mean things can't go wrong. It just means when they do go wrong, that, there was somebody who was supposed to be auditing it, or someone might go to jail or something like that. It does not mean that nothing can go wrong. There's still tons and tons of risk, man. UniQ says Tether is backed by things. Exactly. It's probably backed by a bunch of Chinese debt that already blew up, and they just don't tell us about it. Okay, and then I'm going to answer this last one, then we're going to call it a wrap. So Ephraim says, but the algo coins always fail, and collateralized stables have a better history. Of course, nothing is certain, and I agree with your advice on avoiding fully trusting any stablecoin. Sure. So your question is, do I think you should have stablecoins? And my answer is no. Just have currency instead. At least the currency is devaluing at however many percent a year, but it's probably not going to have some massive dump like that. So, but yeah, I mean, I just keep it real, man. Sometimes people think that I hate crypto or I hate altcoins or I hate stablecoins. Dude, I'm literally just telling you facts and the truth. So don't think that just because I hate on how a chart looks right now, I'm not saying that whatever. I'm not saying Polkadot is never going to be a good project into the future. I'm not saying it can't change the world. I'm not saying that it's not going to be worth $100. What I'm saying is the chart looks like total trash, and we're in a bear market on crypto and most stocks as well, and probably you're going to lose a bunch of money if you keep buying into them. But obviously it's not financial advice. I'm just telling you what the chart says. So if the chart says something is trash, expect me to call it trash. If the chart says something is good, but it's an actual trash project, I'll just call it a good piece of trash. But I'm going to keep it real, man. And a lot of people were asking about Luna not too long ago, talking about, investing in it or whatever. And, I told you guys the truth about how I felt about the Daquan situation and, his $1 billion Bitcoin buy, the same way I've told you about Saylor this whole entire time. Keep in mind, Michael Saylor, Bitcoin Judas, has been preaching to people, sell everything you own, mortgage, borrow against your house, borrow against your family business, do whatever you can and put it all in Bitcoin. Michael Saylor has been saying that. And Michael Saylor and Do Kwon were supposed to be these huge Bitcoin catalysts. Well, let's look at Bitcoin price right now. It is currently at, Bitcoin futures is at 29,930. Bitcoin spot market is at 30,675. Michael Saylor's, no, I'm sorry, it's at 30,114. Michael Saylor's entry into Bitcoin for micro and macro strategies investments is at $30,200. So the dude is upside down in $1 billion position right now. So this is the guy that's supposed to be Bitcoin Jesus. This is the savior of crypto and Bitcoin and all this stuff. And he's dollar cost averaged up to an upside down position. What's going to happen when he gets margin called? What's going to happen when, some of the lies and some of the, cream floats to the top in the crypto market? I mean, this is just the beginning, dude. We haven't even seen blowups. We got down to like 25,000. That's kind of a big deal. But I think most people were either already in crypto or entered at 20,000 after we took out the previous all-time high. So when we start threatening 20,000, when Michael Saylor's down 33% on his position, when a bunch of people are upside down, when a bunch of this margin starts getting squeezed out, then we'll talk, and we talk about potential actual bottoms or bear market ending or whatever. But right now, the pain has only just begun, in my opinion. It's only just begun. I mean, I know people are at 70,000 when I was saying this is the top. I'm selling into this. It's rolling over. We're going much lower. People were like, yeah, right. We just took out the all-time high. We're going much higher, blah, 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 blah. And what did I say the whole time before that even happened? I expect a new high, an expanded Elliott wave flat pattern. And it played out exactly right. So, I mean, I'm not always right, but let's be real here, man. My job is to make sure that I don't lose money and then make money after that. But my number one priority is to not lose money. I don't think a lot of people can sit here and say that their portfolio is not getting absolutely wrecked right now, that their crypto positions are not absolutely wrecked. And I'm not saying, maybe you bought into Bitcoin at 5,000. So you're like, yeah, so what? I was up on each Bitcoin from 5,000 to 70,000 and now I'm at 30,000. So I'm still up 24,000. So F you. Well, who cares, dude? Who cares? Great job. You're up 24,000 on each Bitcoin, but you're also down. You could have been up 65,000 on each Bitcoin, but you don't take profits on it. You got to take profits. You got to protect your principal. You got to make smart decisions. And in my opinion, right now, in the middle of a parabolic bull run, sure, buy whatever crypto trash you want to buy. Buy whatever stock trash you want to buy. By all means. Who cares if companies make money? But when we're in a bear market, it changes. I said it at the beginning of the year, at the very beginning of the year, this year. I said, if it don't make money, it don't make sense. And that is my strategy for this year is. I have no interest in owning any assets or speculating long-term on any assets that belong to a company or crypto that doesn't actually have a use case or make money. So if you don't have positive cash flow, if you're not net making money, I'm not going to speculate on you. I have no interest in it because we're not in a bull market. People speculate on ridiculous valuations and companies that don't make money when we're in a bull market, not when we're in a bear market. Nobody but Cathie Wood tries to buy trash that makes no money that will probably not exist in a couple of years in a bear market. You buy that stuff in a bull market and you ride the strength. You do not buy it, buy the dip, buy the dip, buy the dip, and you're broke. That's what happens every time. So yeah, that's it. We're going to go ahead and wrap it up there. Hopefully everybody appreciated the stream today, enjoyed it. UniQ says, thanks for the stream. Have a great weekend. You too, brother. Have a great stream yourself. Big D says, MS posted in Twitter that a margin call might happen at 20K. Sure. Michael Saylor posted that about his most recent borrowing. So he borrowed 200, what was it? 200 million? Oh my gosh, I can't even keep track of all these numbers anymore. He borrowed $200 million to buy Bitcoin with, if I'm not mistaken. And he used a portion of their Bitcoin as collateral. So, and he said that he did not put up all the Bitcoin as collateral. So theoretically, he put up less than $1 billion in Bitcoin to get $200 million to buy Bitcoin with. So now if that's the case, let's say he leveraged it against all his Bitcoin. They now have rights to his $1 billion in Bitcoin, and then he got $200,000 for them. So now he doesn't even have that $1 billion in Bitcoin anymore. Someone else has it. The same way when you buy a house, they have your title to your house until you pay off your mortgage. That's how that works. So now, essentially what would have to happen is for that leverage, that margin call to come in, if essentially it was the whole $1 billion, it would have to take it down to a point where the $200 million loan was in threat of being paid back. So that would be, in this case, $1 billion would have to go down to 200 million, which would be an 80% pullback. But he didn't put up all the Bitcoin as collateral, and then he borrowed a higher than 20% portion of it. So if he's saying a margin call would come in at 20,000, Bitcoin is currently at 30,000. I want to say he borrowed it when it was roughly 40,000. So if he gives them the collateral that's worth $40,000 at the time per Bitcoin, and he's borrowing $200 million against that collateral, he would have to put up, for it to go from 40 to 20, it would be like a 50% collateral move, because it would be 50% and then you would get a margin call. So that would mean that at $40,000 to borrow, at $40,000 per Bitcoin, to borrow $200 million, he would have had to stake 400 million in Bitcoin. So that's roughly 40% of their, I don't even know what their Bitcoin position is worth now, but whatever it was. So that would be basically what he's saying. So now I don't know the exact numbers. I don't know he bought exactly at 40,000. I don't know when the deal went through. I don't know what the collateral was valued at, etc. at the time. But roughly, if it was $40,000 and there's a margin call at $20,000, that means he borrowed at 50% margin. So he used 2x leverage basically. So that means in order to borrow that 200,000, he put up 400,000. So what would happen is they would have to liquidate the 400,000 to get back their 200,000, and then the $200,000 position he had would be worth 100,000. So they would basically liquidate his entire Bitcoin position, and then they would keep their $200,000, and then Michael Saylor would still have the $200,000 position that was cut in half that's now worth $100,000, roughly. Plus he would still have his other, 500 million in Bitcoin or something like that. So, and that's theoretically, I don't know the exact numbers, but that's how it would basically work. So if that's the case, again, like I said, Michael Saylor is not going to be the only one getting margin calls at $20,000, because I'm going to tell you right now, tons and tons and tons of people bought into Bitcoin once it took out the previous all-time high. So I think a lot of people, probably their entry price was $20,000 or around there. And it just went parabolic since then. And I mean, we looked at this recently. Let's take a quick look at this again. We looked at this very recently on the Bitcoin chart. Let's look back here and see what happened after we broke through $20,000. So this was around the time when we broke through 20K. So this was the retest of 20K right here, which was in December of 2020. And then we pushed up. And then as soon as we broke through, it was 19,371. This candle, obviously big candle. And then that takes us all the way up to basically where we're at now, 30K. Well, how much time went by from the breakout right here of 20,000 to, basically the support area that we're at 30,000? 16 days. So there's 2 weeks worth of price action from 20,000 to 30,000. And when we look at the monthly chart, this really, this just like takes it to the next level. Like the level of understanding. This is 14,000 right here. This is 1 month. So in 1 month, we went from 14,000 to 20,000. And then in the next month, we went from 20,000 to 30,000. So we have 1 month worth of price action and buyers that stop us from going to $20,000 right now. And then from that point in time, we have another 1 month of buyers and price action in this bull run that takes us back down to 14,000. And then we can start looking back here. And when we look back at that 14,000 candle right here, when we look back, that was the highest close we ever had back in 2017, 2018. So there's no candles above that. So there's literally two candles, 2 1-month candles that are the difference between $14,000 Bitcoin and $30,000 Bitcoin. So however much volume took place, however many people bought and into that bull run, there's 2 candles worth of price action stopping us from going down. So when people say we can't go below 20, I'd say sure, there's one candle that says we can't, and then after that we go. And there's one more candle for 14,000. So in my opinion, we're in serious danger right now. I mean, this is a really, really dangerous place. We just put in a new low on Bitcoin. So we've already threatened that. I mean, we came down to 25,000. That's halfway to 20K. So from 30 to 25, Saylor was already halfway to a margin call. I mean, that is terrible. Crypto looks so bad right now. I don't think people understand that. I mean, it's horrible. Ephraim says, appreciate the thoughts. I'm with you that alts are screwed until further notice. Yeah, appreciate it, man. Welcome to the channel. I think you'll see over time, Ephraim. You're obviously new and everything, but I think you'll see over time, man. I'm pretty right on pretty much everything. And we call the bottom of the last Bitcoin bear market. We call the top of both of the Bitcoin pumps. We capitalized on both those moves. We call the top of the stock market. We call the bottom of uranium, the bottom of energy in general. I mean, the top of the ARK fund. Like, we've basically nailed it. And I don't even try to call tops and bottoms. It just sort of happens like that. So, and Big D for the final comment says, gotcha. Thanks for everything, Crypto Trend Trader. Have a great weekend, and thanks for your explanation. Yeah, for sure, man. Everybody have a great weekend. Protect your principal, protect your capital, be responsible. Don't get suckered into these rallies. The most important thing is where the weekly closes today. Where the weekly closes on stock market is huge. Where the weekly closes on, futures crypto is big too, but also, the weekly close on spot market on Sunday as well. So let's pay close attention to those. And the most important thing is we do not want to be seeing, we've already seen daily low closes. We do not want to see weekly, and we definitely don't want to see monthly lows. If we see new lows on a weekly or a monthly, expect further downside. Just think of that example from earlier, days without incident, days without a new low. Because every time we put in a new low, it just tells us the probability of putting in a new low after that goes back up. It resets. So what we want to see is a clear bottom with bullish divergence on like a daily or potentially weekly time frame. And then we can start looking at, okay, are we carving out a bottom? We're looking for candlesticks. Then we're looking for candlesticks pattern. We're looking for key support areas. We're looking for Fibonacci retracements. We're looking for moving averages, crosses. We're looking for slopes. All that stuff. But right now, I mean, these markets look terrible. They look absolutely terrible. And if I can help anybody to make good decisions that will protect them from some of these drawdowns, I mean, I can't say specifically, but I mean, anybody that's been listening to this channel at this point in time, if you can honestly tell me you've been watching this channel for a while and you haven't learned something, or you haven't avoided catastrophic losses or made, double or triple digit returns on your portfolio, I honestly don't even know what to tell you at this point in time. I really don't know what to tell you. Because if you're not learning something, I don't even know. Because I try to make there at least some useful information to learn from every single stream. And we have had countless, I mean, hundreds, if not thousands, of beautiful trade setups that have played out over the last couple of years. So, so if you haven't made money or you haven't learned anything yet, stick around. I bet you do. And if you are interested in the indicators or the trade group, let me know, and you can shoot me an email, and we'll figure that out. And yeah, I think we can go ahead and wrap it up there. So it is Friday, 10:30 a.m. Eastern Standard Time on May 13th, 2022. Be careful. It is Friday the 13th today. So look out for masked people. Oh, wait, you can't even say that anymore because people are supposed to still wear masks. Look out for people carrying big butcher knives or like crazy claws or wearing weird sweaters, anything like that. It's probably if they look like they're in a Halloween costume today, careful. But anyway, enough joking around. I appreciate everybody tuning in today. I appreciate each and every one of you, all the interactions in the chat today. Ephraim says, I enjoy the crypto market compared to traditional markets and crypto OG, but know nothing of trading. Nice, man. Hell yeah. That's what's up. Yeah. I mean, I enjoy crypto markets as well because they don't close. I prefer that over traditional markets. But I trade everything because honestly, I'm just looking for opportunity. And when opportunity strikes, we make money. And that's what it's all about. So I'm going to go ahead and wrap it up there with our Friday morning, well, now afternoon live stream. Obviously, we go live every single Wednesday and Sunday. Go live at 8 p.m. Eastern Standard Time on Wednesdays and Sundays until about 10 p.m. And then obviously on Fridays from 11 a.m. until usually about 1 p.m. for our Friday weekly market wrap up, and obviously look at what crypto is doing over the weekend. But yeah, that's it for today. So appreciate everybody. Thank you all. Reach out if you are interested in the group indicators, etc. But that being said, going to wrap it up there. Crypto Trend Trader with our Friday afternoon live stream. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, and I'm out of here. Peace.